because of what we saw here, and also here because of where structure broke. Because both those things being able to hold and Bitcoin not dumping, as I noted on last stream, I expected a pump to happen, and so far that's happened. Now the big question is, will we hold it? So we dipped a little bit below the previous high, so this is what you're going to want to watch. If we go below 94.5 and we get a daily close below that, we run the risk of taking out a huge pool of liquidity here, which could lead to sort of a slippery slope as there's even more liquidity here, potentially taking out 80K. So don't want to have a daily close below like this, or we could be going for these lows and forming a new higher time frame low. So far that's not the case though. So looking to the top side, there's a couple areas to look for. There is a cheeky area right here where we could see some turbulence. There's two local areas that I haven't talked about which we could potentially see some turbulence, which is at 104. We had a clearing of short side liquidity here. It took it out, price didn't go higher, and instead fell, so you could argue there's some distribution happening there. So 104.5, the only thing about 104.5 is there was a little bit on the lower time frame, there was a proper test of it on the local, but we haven't had the high time frame test of it yet. So that could still happen. And then another spot, which is an area where I'd really like to see price go above, is approximately 99, more specifically 98.96, because this is sort of where the previous, and remember I don't like to trade based off this, but sometimes it can give us clues on the supply and demand, but it's where the previous support was before like the price fell out, and because price is now below that, one could argue that it's turned into resistance. So we don't want to reject off that, because then it shows really strong fluidity on the bear side of the market. So we're kind of in a fragile spot right now. So we need to maintain above here, and hopefully we can get through here. Because even if we start consolidating up here, it looks a lot better. Obviously a higher price is better, but an area where you really don't want to see a rejection is there. And then an area where we could get turbulence, at least on the more local time frame, is at 104.5. Rejecting off here and seeing the price fall from 104.5 is completely fine. We can rebuild structure, and we can see what sort of retests happen around 98.9. But dumping from here is fine. It means that this uptrend is still intact. Dumping from here gets a little bit spooky, particularly if it takes us back below the previous highs that were formed. Because once you take, basically where we're at right now is we're looking at whether or not there's going to be an imbalance of supply and demand. So for the last couple of months on Bitcoin, we haven't been able to really gauge or have a true gauge of what that supply and demand is. There were little subtle hints along the way, but nothing is going to be as telling as where we're at right now. And the reason being is because all of the short sellers in this area, pretty much anybody who's shorted Bitcoin since late November last year, has now been invalidated in the last yesterday and today. Certainly by today they've been invalidated if they shorted. At least the majority of them have been invalidated if they shorted since late November. So the question is, what happens after the shorts get squeezed? So we know that when shorts close their position, those operate as market buys. They've got to buy back the shares that they borrowed when they shorted it, because remember, when they're shorting it, they're just intending to buy back those shares at a cheaper price anyways, but in this case, those shorts lost. So where we're at right now is going to tell us if there's an imbalance of supply and demand. This move is pretty violent, and one of the reasons why is, at least so far, is because of all the short sellers being knocked out, like I was talking about. So you can see here on this chart, you see all these bright colors up here. This is where the short sellers' invalidations are. So all these invalidations got taken out today and yesterday, which led to a bunch of market buys slamming the derivative market. Now we just want to see whether or not the spot market is going to follow. Because remember, in crypto, the derivative market, if you're longing or shorting something, you're not actually affecting the true supply and demand of the spot market. So now it's in the hands of the spot market to see what happens. Like I said, we did dip below these highs a little bit for a small period of time, but it wasn't, we didn't have any major closes below there. Certainly not a daily close below there. So that's sort of what I'm looking for there, to show whether or not there's going to be an imbalance of supply and demand. So it's good that we pumped. But now it's sort of the testing phase of where everybody can see what the true supply and demand is. Shorts get squeezed, a bunch of buys hit the market, the arbitrage market making bots sort of push that spot price up with the squeezing of shorts, and then it can only be maintained if there's truly enough demand to match the supply. If there isn't, then we'll see it fall back below. If there is, then we should be able to at least get to 99k, and then ideally, if we're going to go for 99k, we might as well just get above 100, because we don't want to see any strong bearish fluidity that comes out of the market, signifying that the bears are still in control in this range. That's more of the local resistance levels. On the way up, though, I've noted about these in the past, so I'll try and be quick about them. But the previous all-time highs where we saw the short squeezes come in the past, this is sort of the last main area of turbulence. There's a couple other ones a little bit higher, but why is the box being drawn? There we go. This is where ideally I'd like to see whether or not the bulls can actually get through there. Because if they can get through this, then they've done a pretty good job. There's some other cheeky areas over here and here, like this one and this one, but once we can get back above this red box, or sort of the supply zone, then there's a lot more room to breathe, and then more structure can be formed. But if we see a rejection here, that's where we sort of need to be a bit cautious. So the big area is where we're at right now, and then up here. Both these areas, a rejection from either one of them, it's time to be a bit cautious, because, you know, the first one is failing this would lead to a high probability of taking out 80k, or at least going and retesting the lower 80k range. So if we fail this, we could be testing down here or lower. And if we fail this, we've got some room to breathe, although it does show a pretty strong bearish fluidity on the super high time frame. It might look reminiscent of what you know as like a head and shoulders, right? So here's the left shoulder. And I'm not using stock patterns, maybe it's easier to visualize for people to see it, but this is sort of the left shoulder, the head, and then the right shoulder would be there. But the main thing I'm looking for there is the fluidity. It doesn't have to look like a head and shoulders, but it might be easier for some people in the chat to visualize it like that. The fluidity just meaning, you know, when the bulls eventually do push into bear territory, how do the bears respond? If they win the fight, that's one thing, but if they win it decisively, that's another thing. So as you can see, if I just partition it into two big ranges, we're still at the relative lows, and these are the relative highs. If we get back to the relative highs, we want to see what kind of battle transpires, and then ultimately, is it a clean, decisive victory or not? If it's sort of a messy fight where we see something like this, it's way less concerning that the bears are still in control. But the first step, regardless, is where we are right now, because like I said, we want to see if there's going to be an imbalance of supply and demand there. So we'll be able to see that happen live on the low time frame here in a second, and I'll talk about Bitcoin in a little bit. But I'll leave up the low time frame. Let me just mark out the previous highs, so we have a general idea of where we don't want to go back under. At least if you're bullish. If you're bearish, I guess this is the area that you'd want to send the price under to break the structure. But you need to get a daily close below that, and we still have a few more hours before the daily is going to close. So I'll leave up the low time frame action. Remember, you don't want to go underneath this. It's not a big deal. You just don't want to start, you know, sliding below it and then having a daily close. But leave the Bitcoin up, the action up here on the left, and then let's talk about Legacy. Because Legacy actually had a pretty downward move today, which is odd, right? Because normally when Legacy has a downward move, like the US stock market, it usually means that crypto is going to have a downward move. It's the first time we've seen in a while where, you know, the S&P is actually down and Bitcoin's up, at least for right now. It's a bit odd, right? We haven't seen that in a while, at least the small decoupling. They're not completely decoupled, by the way, guys, but usually when volatility gets higher on the S&P, it's usually when they're the most coupled together, which is odd that that's not the case. It certainly is weird right now because volatility, the VIX has spiked, and that's usually when Bitcoin is going to follow the S&P quite closely, but it's not the case. It's sort of an anomaly that we're seeing right now. But it could also be the case of all those short sellers getting squeezed out, which is I'm a little bit worried about. Meaning, normally if the S&P dumps a lot and it does it quickly, Bitcoin will follow. And that's not the case right now. And I'm wondering, is that because all these short sellers got squeezed at the same time, which is maybe artificially propped up the Bitcoin price? But this is just speculation until we have a good idea of whether or not we're going to hold above the previous highs, because that's where we want to see the imbalance of supply and demand, or lack thereof an imbalance of supply and demand. There's actually proper demand coming in. So the side that I'm kind of worried about is Bitcoin's doing good today, the S&P is doing bad, but is that just because shorts got squeezed? And if it is just because shorts got squeezed, that means that we don't really have the true demand that we need to maintain the price levels that we were able to achieve today. But we'll see how it develops. Again, it's going to be on the left here. High time frame, I spoke about this last stream. High time frame VIX structure is still kind of broken, but the more local time frame is not. When we talk about the bottom side of the VIX, so the bottom side of the VIX got broken a bit, but the lower time frame is still kind of maintained. So usually just yielding to the high time frame structure, which, to make that simple, it means that until I see more volatility come in, the plan for the stock market is still the same. It's obviously down about 1% today, at least the S&P 500, and it's interesting to note we're in another one of those circumstances where the Mag 7 is down, right? So you have like Tesla down, obviously Nvidia's down, like I've been talking about, and pretty much the rest of the Mag 7. But what's interesting is that the smaller market caps outside of the Mag 7 are still carrying the index. So the index is still doing not as bad as you would expect. An easy way you can look at this is look at the relationship between the NASDAQ and the S&P 500. The NASDAQ's down 1.6%, while the S&P 500 is down 1%. So it's down a bit more. And so technology is taking a hit while the rest of the market is sort of helping guide that along. Gold is slowing down a little bit. Nothing too noteworthy here on gold. Silver still fucking pumping to the moon, showing no signs of any breaks. And a lot of the other metals market and commodity markets are also following suit here. Oil's having a little bit of a rally. Any higher rallies on oil, I'm rooting for oil to continue to go up so we can get another short opportunity on it, because like I said in the past, I think it's too late to short it, even though I am bearish on it. Let's see if oil can continue rising, and then we'll see if there's any opportunities to short it in the future. But right now it's sort of a hands-off play. The dollar, you guys know, my plan for the dollar hasn't changed at all. The yield is finally going down, so this is a good sign. We're seeing the 10-year go down, which is good, because I was a little bit concerned as to why it wasn't going down. But hopefully it continues to go down and make sense with the rates, and obviously the rates being cut, the yield should come down unless there really isn't that much demand in the bond market. Regardless of the stimulus the Fed is trying to give it, which would indicate foreigners are selling U.S. bonds. I've noted this plenty of times, but I do think it's interesting because the bond market does have an effect on the equity market, and then in turn would have an effect on all markets like Bitcoin, the altcoins, precious metals. They're not directly linked to the bond market, but I mean, they're pretty correlated. It's not direct. They're not perfectly correlated, but they're pretty fucking correlated. I mean, all markets are pretty correlated once they get to a certain market cap. Usually, you'd want the yield to lower with indices rising. Yeah. So as long as this yield keeps coming down, it should be green flag to continue. You just don't want to see those abnormalities pop up, because they haven't happened in very frequently in modern times. But yeah, that's pretty much an update on legacy. I can go more in detail on some legacy stuff if you guys want. I guess the yen is up today a bit, with the dollar slightly down. So yen likely up due to the Japanese continuing to hike their rates, indicating that inflation might slow there in the Japanese economy, at least relative to the other economies. You want to look at natural gas? We can look at natural gas in a little bit. Let's have a look at Ethereum. So Ethereum's sort of being carried here a bit by Bitcoin. Had some weak structure on the local, had some weak structure on the high time frame. But of course, if Bitcoin's going to pump, then most of the time the rest of the crypto market will follow suit. And so, you know, having weaker structure than Bitcoin right now, it did still go up because Bitcoin went up, but it's not up nearly as much as Bitcoin, right? Bitcoin's up 1.5 today, Ethereum's up 0.5 today. So that leads us, and I'll come back to the Ethereum dollar chart here in a second, but that leads us to look at the ETH against Bitcoin chart, right? So we have an instance where Bitcoin is up more than Ethereum in these past couple months. In fact, I'd say the past like 6 months. Ethereum's actually been outperforming Bitcoin in a lot of, at least against the dollar in a lot of scenarios. But it's still fine. ETH Bitcoin structure is still intact. It still looks fine. It's getting a bit messy, but it's the structure is still maintained, which is important to see. Because what that means is if Bitcoin does go on another run, all things considered, Ethereum should obviously follow that run, but then how much does it follow it? Does it have a significant rally, or is it one of those scenarios in the last 4 years where it has a rally with Bitcoin, but it's not anything too noteworthy? Whereas I think this time it could be a little bit more noteworthy. So Ethereum, the most recent move, because of Bitcoin, has actually set up something quite nice here. We're starting to form these equal highs, and I want to show you guys this side by side because it looks pretty similar to what Bitcoin was doing. So this high is about close enough. We'll see if we can get a bit higher on the rest of the day, but you can see that the highs are really close together. And let me show you the Bitcoin chart before it popped off here. So you can see on the Bitcoin chart, it had like equal highs up here, just like the Ethereum chart. And let me go to the daily so it looks even more alike. So they're both on the daily chart now, but as you can see, you know, Bitcoin had a lot of equal lows, but the good news was that these lows were farther spread apart than the highs, right? I've talked about this in length before about why this is important. It's mainly just looking for the cluster of liquidity, particularly in the derivative market. And so same thing here, right? You've got equal lows, but they're more spread out than the highs, which are now sort of in the same spot. So if somebody had shorted Ethereum since the beginning of December to now, they likely got liquidated today. If they didn't get liquidated today, their liquidations could be anywhere up here. And then if they're shorting today and they're opening up a new short on Ethereum, then they'll be sharing those same invalidations with anybody who didn't get invalidated from today's move. So you can see these two structures looking pretty fucking similar. The question is, though, will Bitcoin hold above these highs? If we hold above these highs, or if we get a little bit higher, that should be the fuel that Ethereum needs to follow Bitcoin in that regard. So we could see a pop, but just like always, when looking at Ethereum or looking at any altcoins, you should be looking at Bitcoin, because obviously if Bitcoin dumps significantly, regardless of how Ethereum looks, it will also dump significantly. So let me go back to the low time frame now. See, but that's the similarity that I was trying to show you guys, where what we achieved today, and you can even argue yesterday on Ethereum, has put us in a spot where it's very similar market structure to Bitcoin. The question now is if Bitcoin holds it. If it does, then it looks good. If not, then we could start challenging some of these lows. And Ethereum has some room to breathe, but because Bitcoin is in a very fragile area, not super fragile, I don't know how to put it, maybe fragile is not the right word. It's in a spot where it's being tested. It doesn't look fragile right now, it's just like it could be very fragile. So it's in a spot where it's being tested, and if it fails that test, then Ethereum could break down. But if not, then Ethereum should fly. And then the question is, where does Ethereum go, right? And I've noted at these levels before, this is pretty much done. There's a little bit of a front run on it, so what we'd actually be looking for here is to marry the local with the high time frame. But you can see this is a lot of room to run, right? From 3450 all the way up to 4K pretty much. But it would look something like this potentially is where we could see turbulence on Ethereum. But keeping in mind that we're paying attention to what Bitcoin's doing if and when Ethereum gets back up here. So that'd be sort of one of the first big roadblocks for Ethereum on the high time frame. Outside of that, though, there's really not much, because you have equal highs. So you have short sellers who are sort of dogpiled in the same spot on the high time frame. So if you can get through 4K, more specifically 39.5, then the bear structure starts to break, which isn't a guarantee. But if the bear structure starts to break and Bitcoin looks solid, then you could argue that we could get an all-time high on Ethereum. As far as an all-time high on Bitcoin, I'm not too sure about that yet. We're still going to take it one step at a time, but as long as Bitcoin is still trending upward, then Ethereum could get to an all-time high with haste, particularly because we see this rotation of usually later in the cycle when Bitcoin's sort of at the end, entering the bear market of the 4-year cycle. We could see altcoins start to get a lot of attention and rally quite quickly. I think more so now than ever, though, the market sentiment is closer tied together than it's ever been. Because years ago, you could have Bitcoin dumping, but then altcoins pumping, and I don't know if that's going to be the same reality this time around, but if crazy shit happens, I wouldn't be surprised. We've definitely seen it before. We're still just going to take it one step at a time, but Ethereum pretty much did what it needed to do. Now it's in the hands of Bitcoin, and then after that, if Bitcoin can do it, Ethereum will fly most likely. And as a result, most of the other altcoins should follow suit. I don't know if the altcoins are going to hit all-time highs or anything like that, but you know, Ethereum doing well certainly sets the stage for the altcoins to do better. What's up, Shredded? Any Netflix opportunities? Netflix is getting hit pretty hard right now. I don't really see much on the Netflix chart. It's kind of a hands-off thing. Competition in the streaming world, it continues to get more saturated for the paid subscription things like Netflix and HBO Max and Disney and Paramount and Hulu and all that shit. It's very competitive. So I don't know. For Netflix, I'd have to see more structure develop before I'd consider anything here. Yeah, it is quite a scary chart. Yeah, it's certainly not looking to rush into Netflix. I mean, if you are invested in Netflix, I hope it does well, but this chart does not tell me anything that shows that it's probably a good buy. Yeah. So we'll wait to see more structure develop here, but I wouldn't be too aggressive unless, you know, it's up to you, not financial advice. If you want to buy it, you buy it, man. It doesn't look good to me. I'll look at natural gas now too, though. NG1 Bang, right? Or I guess we can look at this one. Yeah, I don't trade natural gas personally, but that's really nice fluidity. I can see why it did so well after. The question now is, oh, this is actually a difficult chart to read. Hold on. I haven't looked at this in a while. Okay. Okay, that's good structure. Wow, this is a cheeky chart. Okay, so again, good fluidity. You know what? The fluidity on this is really good. Maybe I should give natural gas more attention. It looks good. Maybe like 4.8, 4.9. Are you still a 4-year cycle adherent? No, I'm not. The 4-year cycle stuff, it could work, it couldn't work. I just trade the chart. If it looks, you know, good, then I'm going to buy it. If it looks bad, I'm not going to, or I'm going to short it. The 4-year cycle might happen again. I don't know. I don't subscribe to really any narratives outside of what the price is telling me, because nothing beats the price. Literally nothing. No narratives, no news stories, no indicators, no anybody's opinion. The price is the fucking reality. The price is the truth. So maybe we're in a 4-year cycle. I don't know. I just take it one step at a time. When I see the structure form, then I'll play off that. As far as natural gas is concerned, you don't really want to retest this because it's already done. Yeah. You might have daily div here. If you can reclaim, I don't see a good trade here, I'll be honest, because it doesn't really look like an actionable spot. But if I had to trade it, what I would do is I would wait for to see if price can have a daily close below the low that was created on the 9th. And then you'd be targeting the high that created it, because that's where the bullish div would be forming. So If it can close above here, particularly today, but closing above tomorrow would be okay too, I think, with the RSI. Then you would target the high that created it. So something like this would be the play. And then anything after that would just be bonus points, but you could get more. And if you do get more, then the big turbulence would be like 4.8, 4.9 right there. What about supernatural gas? Yeah, I hadn't thought of that one. Let's look at Solana. So Solana's following the plan quite nicely. It's also pretty much there. It's real close. So it's a bit arbitrary at this point whether you want to say it's there or not. I'd like a little bit higher, but if you guys remember the play for Solana, we had this defined range of all these equal highs and all these equal lows. So we saw where all the short sellers were likely had their invalidations, where all the longs likely had their invalidations. The longs got taken out, but the price didn't fall off a cliff, at least relative to the previous movements in the past, right? Because it's all relative. And then we had the retest of that, which was quite smooth. That's pretty textbook. And so now we're looking at the other side, right? So it doesn't fall off a cliff. We see an imbalance of supply and demand. And all that means is longs got liquidated, but there wasn't enough sellers to match the demand in this area of the actual spot market. So derivative market gets squeezed. Spot market is just a temporary move because there wasn't enough supply to match the demand. We had the retest, and now we're going to the other side. So now we want to see the same thing occurs. If the same thing occurs, we're either going to fly. If we fly, then there's no opportunity. If it does fail it, similar to how it did it here, then it'd be the same thing, just on the other side. And it's still in the hands of Bitcoin, but this would look quite detrimental for Solana, just all things considered, because the structure on Solana still doesn't look so good. And remember, it's not because I dislike Solana or their community or anything like that, guys. It's not a personal thing. But ideally, if you're going to go for it here on Solana, hopefully you can actually, send it a lot higher, because then you have a lot of room to breathe, and it looks way better in terms of the next spot to hold, which would be right here. So you send it way higher. I don't know what's going to develop here. I don't like speculating this far in advance, but if I just had to, try to, then you'd want to hold there because it's the next spot in the fluidity. You have this one. You have some micro tests of these ones as well, but the next big one would be here to hold that. And then you can get the ball rolling and start to try and break the bearish structure on the other side. If it closes above the highs, no. I don't take longs on, like, I guess what retail would call breakouts. I look for reversals because I want better risk reward. Because I know I'm going to be wrong, right? I know I'm going to have losing trades. So any trade I take, I want to position myself to have really good risk reward. That way, the burden of winning every trade doesn't exist as long as you practice good risk management. So really, when we're looking at this chart, there might be a short opportunity. That's all there is right now. And then if you do really want to long it, what you could wait for is if it does soar, then you want to hold this here. This would technically be a resistance turn support flip, but I'm looking more left. I'm looking at this right here, of where that line comes from. So then you might ask yourself, you might ask me, why would you long here? And if you're going to long here, why wouldn't you just long right now? It's the same level, right? Because I want to see if there's an imbalance of supply and demand first. And where would I put my stop loss if I longed it right here? At the lows, then you're going to get no risk reward. Like, I can map that out, but it just, the risk reward, I mean, even if you're egregious with your profit target, you might get 1.5. Oh, you get 2 off of it. Okay. Yeah, you get like 2 risk reward off something like this. It doesn't look as good. But let's say that structure develops here. And this is where it gets a bit trickier from the trading aspect. Structure starts to develop here, so you want to use like a more local stop loss. You might get, because you're going for a local stop loss, you might get tagged out a couple times here. Like, we might do some insignificant lower lows on the low time frame, which could tag you out a couple times. But that's okay, because you can see the difference here. The risk reward that you're aiming for is 10. Can I make this easier to see? Is it easier? Yeah, there we go. The white's a bit easier. But you see how you go for 10 risk rewards? So you only need to win this trade like every so often. You don't have to win this very often. But the other trade I was talking about, where you'd like try and buy the breakout, you have to win that trade to you know, it's a 2 risk reward. So I don't know, 30-40% of the time, somewhere in that ballpark. What's up, Leo? So it's better to it's better to wait for the, and then also this is a higher probability of actually achieving the target up here because you've already confirmed that there's no imbalance of supply and demand on the top side of the market. So all that means in simple terms is short sellers lose, which means the price temporarily goes up. And if there's not enough demand on the spot market to follow that, then price will fall back down. And then you know what the supply and demand looks like. It's exactly what's happening on Bitcoin right now. What are you using for order flow? Just really vanilla stuff. And I don't like use this to open or close trades. I just get an idea of what the how deep the liquidity is in the books, and then where the icebergs are. But other than that, it doesn't really influence my decision making too much. You can see accumulation distribution happen with order flow, but it's usually you're looking at like a low time frame thing when you're looking at that, which can be advantageous, but you have to marry it with the high time frame. So if high time frame price structure looks good to go, let's say up, and then you see like an absorption on the low time frame order flow, then you have confluence between the two and the probability slightly goes up. But you can't just only use order flow on low time frame because you're still going to be driving blind. It's like this 1 minute chart, right, on Bitcoin. If this is all you're using, let's say that you've never seen this chart before and you're just on the 1 minute and you're trying to formulate a trade based off what you're seeing here, you're going to get your ass kicked because you're not taking in all the context. You're zooming into a very small portion of a picture and then assuming you know what the picture looks like. When you have the opportunity to zoom out and see the whole picture and then zooming into a portion of the picture. Does that make sense? It doesn't matter what financial instrument you're trading. If all you're doing is opening it up, going to the 1 minute, and then trying to be like, oh, this is a swing fail pattern, or whatever it's called, the ICT shit, gonna, you know, I don't know what the retail stuff is anymore, but then you're just gonna get fucked. How do I know this? Because I tried it for a while. Not ICT stuff, but doing that a little bit more degenerate stuff where you're just on the 1 minute. 1 minute's not bad though. You can trade it. You can use it to scalp, but you want to know, are you in an area where it's better to look for longs, or are you in an area where it's better to look for shorts? Because in this chart, it might look like, oh, it looks better to look for shorts because we're in a downtrend. Well, this is a micro downtrend. The shorts don't become better until we get below here, because it could still pop any second. Smart money type shit. But yeah, man, order flow is not bad. Just like any tool that you want to use outside of the price isn't bad. You just have to know that the price is the king. Because the price, I mean, it tells the reality. And then using high time frame structure is really beneficial, because at least you know what areas are important on the low time frame. Like if I just zoom out like this as much as I can, you don't know where these levels are coming from. They're coming from way over here. You know, I don't want to scroll to the left a bunch, but you don't want to dip below them. You don't really want a daily close. You see how we dip below it a little bit, but you don't want a daily close below that. That's where it starts to get messy. I just have the 1 minute open right now so that you guys can look at the action while I talk about higher time frame stuff on the right. All right, that's enough ranting. Let's look at the next one. A lot of buzz on Dogecoin lately. I mean, it's working, but obviously I didn't get filled because it was front run. So it's the same play. It's pretty similar, at least. You're looking for clearing of short liquidations on Dogecoin, and then see if there's supply and demand that follows it. If not, but the better scenario, I guess, it'd be better for me, but I'd want to see some retests either here or here. Those would look good to long as Bitcoin hasn't confirmed an imbalance of supply and demand on the high time frame. Basically meaning if Bitcoin doesn't have a daily close below these two lines, and Doge is trading around here or around here, it looks like a good long. I have time to check out XMR. Yeah, I'll look at XMR. But the thing about XMR is it's just flying right now. There's not much to report on it. Look at that thing fly. I talked about the XMR rally on. There's a YouTube video where I talked about it about a month ago before it took off. But now it's like it's too late, right? Like what? I mean, I'm not gonna short it. I'm not gonna add on to longs. I gotta wait for something to develop here, man. This shit is, because as far as I'm concerned, it's gonna keep going up until I see it change. Until the market shows me some structure that would point or indicate that it's not gonna keep going up. I mean, it's gonna keep going up. It's like the silver rally, right? We haven't really seen much in silver that would indicate that it's going to slow down. I mean, there's areas where it might have slowed down. Like, yes, this is an area where we could have seen it slow down. But as far as it like doing this, there's no structure that points towards that yet. So there's not really a short opportunity until that structure develops. So yeah, there could be a moment where this thing slows down. But as far as like opportunity to trade it or to short it, I don't see any yet. And as far as longing it goes, I mean, you could, but where are you going to put your stop loss? It's kind of like you're kind of chasing it down, which works in sometimes. I mean, in a really bullish market, it can work. Like, I'm sure there's plenty of people who did that with gold and silver, but that's bad habits. In my opinion, you're building bad habits by just chasing the price, expecting that it's just going to go up forever. It could, but I'd rather wait for something that has, you know, some form of probability outside of just expecting that it can't go down. Copper is a good bet. Yeah, copper's been doing good as well. Yeah, no, the commodity markets are doing good. It's just the equity market's getting slammed. That's it. But it's good to see. Well, it's good and bad to see. Usually you don't want to see the precious metals market rallying with the equity market down from a moral standpoint because of what it does to the economy. But seeing Bitcoin go up while the S&P is going down is quite interesting. And not just, it's because the volatility of the S&P is pretty heavy today, right? This is a volatility chart. Usually, if this is happening, Bitcoin's going to be dumping with the S&P. My onion market wallets. Trade in the onion markets. But yeah, if you're unaware, the chart we were just looking at that I said was soaring is called Monero. In crypto, it's pretty much the established. It's between this and Zcash as the established privacy coin. It's been around for a long time. One of the older crypto coins, I believe, like 2014, which that might not seem like a long time to some people, but compared to the crypto market, that's a pretty long time. But yeah, it's finally having its breakout. And it's one of those communities, like the privacy coin communities. I said this about Zcash. These communities are like cults. They're diehard. So they've been holding these bags for a long time, watching everything else go to the moon while they just sit in their bag that's going sideways. I don't know how quick they're going to be to sell. I think that these guys they're in a cult and they're going to let this thing fly. Eventually it'll come down, but the question is when and where. I don't know. We have to see how it goes, because you saw what Zcash did, right? I mean, look at this rally. Zcash went up, well, kind of cherry picking here, but if we take it from the lows in August to the highs that it produced at the end of the last year, 2,000%. I mean, in 6 months, it went up 2,000%, and it's still kind of hovering up there. It didn't just pump and then dump, right? Like a lot of cryptos do. I mean, it still might, right? Because we're actually, when I zoom in, I showed you guys this earlier, but the big area where you want to watch now is right here, this line, to be more precise, like right there. It's about 477. If you do this, you'll get another low. I'm going to clean up this chart, but basically, and this is what I don't want to see happen on Bitcoin. The chart looks kind of similar. What the similarities are, all the equal highs in the same spot, and then the lows are more spread out, just like how Bitcoin was, right? And then Bitcoin popped recently. Zcash did this before Bitcoin, and then Zcash fell below the previous highs. So these highs right here. So Zcash fell below it. And now we want to see if price can rebound and retest it, what kind of fluidity shows up on the bearish side of the market. So rejecting from 477, 478 like this will likely lead to a low lower than this low. And who knows how deep that could be on Zcash because we went straight up. But I can't imagine it'd be that deep because the fucking resilience of these communities is unmatched in the crypto space. That's why they've done so good while the rest of the alts have not. You owned a bunch of XMR, spent most of it on legal substances. Okay, yeah, legal substances. You must have some laying around. Maybe. Check the wallets. But yeah, another leg down if it fails this, and then maybe there's something that develops and it looks better again. But the dev team apparently like gave up on Zcash, so that's I guess only more fuel for the Monero to keep doing good, because those are like the two rivals, Monero and Zcash. All right, let's look at XRP. So XRP rallied, kind of missed the train on it, unfortunately. Would have liked a little bit lower, but it's still good fluidity. We saw a little bit of an imbalance of supply and demand, but it's not as detrimental because of the structure here. So this structure is a little bit different. Let's see if I can articulate it. But you see how there was a lot of equal highs and we sort of had this imbalance of supply and demand. How do I say this? It's easier for me to just see it. So instead of having to articulate it, but like you see how this structure with equal highs is a little bit different than this structure with the equal highs. So yeah, I mean, you can argue it was an imbalance of supply and demand, but it's not a detrimental one where I'd say, oh, now we're going to go for these lows. Again, it's hard for me to explain that, but that's just how I see the structure. But I'll show you what I'm looking for next here on XRP. So we had good fluidity. That's a great sign. A little bit messy, but good enough, right? And then we want to look for the next one. So the next one would be, I guess the next big one would be like here. The one after that would be there. So then we can see how that lines up. You can see that we've held both of them so far. We just recently tested that one. The next one up after that would be right here. And this is it's kind of hard now to look at it like this. But so what we want to see now is another rally. Ideally test the other side of the fluidity. So where all those highs got swept, like here. And then see the retest, hold this again, and you're probably good to go for a new high. Sorry if that got kind of complicated, but just looking for areas where there was conviction in liquidity, or where a lot of people did the same thing at the same time, and then how the price reacted to that. Remember, there's always people buying and selling at any given price level. You can look here on the right with the orders rolling in. There's always going to be a mixture of red and green. But identifying important levels is where everybody has to hit the green button at the same time, or has to hit the red button at the same time. And what I mean by when I say they have to do it is because of leverage. At a certain point, if the price moves far enough against you, you don't have a choice. The exchange will do it for you. If you have margin, price moves against you enough, you're going to have to close the position. If a lot of people do that at the same time, then you have conviction in liquidity. And then we want to see what the price does afterwards, so we can gauge what the true supply and demand on the spot market is relative to that temporary move that was created by the derivative market. And so I'm looking at that, and then I'm looking at the structure of it. You hold good structure, okay? That's good fluidity. So basically what that means is when the bears push against the bulls in bull territory, first we want to see, do the bulls win it? Second, we want to see how decisively did they win it? Okay, they won it quite decisively there. So then we look for the next one, which would be here, which is again another fucking front run. And then here, another fucking front run. And then here. So it's the same thing, just building a staircase down to see where the areas of conviction and liquidity was, holding the structure, holding the structure, holding the structure, and then probably get a rejection of turbulence because it's the same thing on the other side. And then you hold it again, you can pop it. XMR 1K when? I wouldn't be surprised if XMR goes to 1,000. It might go even higher than that, honestly. Just that train has sort of already left the station, you know? Unless you're just going to start DCAing spot or something. I guess that could be a way that it could be viable, but still kind of aggressive. As far as parking cash in anything right now, it's kind of difficult to say. Um, I'm pretty active on the market, so I don't. The long-term stuff, I mean, you could just do like a mixed precious metal portfolio with bonds in there too to mitigate some risk. So most people say go equities and bonds. Like make sure, I think they say what 60-40 or something like that. Like you want to go like pretty much half stocks, half bonds. I think we're in the ballpark now where it's better to do metals instead of equities instead of stocks. But we'll see. I mean, stocks are they're usually the highest return on investment over the long period. But it doesn't mean they're not risky. I do Forex as well. Yeah, and stocks. Yeah, if it moves, I'll look at it. Forex doesn't really move that much, but at least the fluidity is really nice. Because a lot of the principles are the same. Basically, I'll look at anything, right? But in terms of giving you an opinion on what I think it's going to do next, it needs to have a big leverage market. So there needs to be a lot of leverage in the market, because then it's less random. If it's just a random common stock that doesn't have a big options market, and even the options market is, if it's like a individual common stock, like an individual stonk, I'm not going to be as accurate at telling you where it's going to go next. But things like crypto, metals, and Forex, so like crypto commodities and currencies, they all have a good amount of leverage in them. Can you look at dollar against yen? Yeah, dollar against yen is a bit tricky, but I'll look at it. I haven't looked at it on stream in a while, but all right. Let's see. Checking a few currencies out today. Thought super high time frame lows on the Kiwi dollar was very strange. I can look at the Kiwi dollar in a little bit. That's pretty much equal highs in my mind. So shit. The only actionable thing I could see here is to short it. Okay, so what you could do here is you could wait for a break of the high time frame structure, which I believe is right there. I gotta zoom in a bit here. Hold on. No, that's wrong, because that was made before the new high. So it'd be like right there. Okay, so what you could do here is wait for it to fall underneath 1569. And that should break the structure, or at least damage it, and then look for the retest of that. And then hopefully it damages more of the structure. And then the retest for the longs, you'd have to wait a minute before you could long this thing. Unless you're really bullish on the dollar against the yen. You look for something like here for longs. Something like this for longs. But if the dollar doesn't trade lower against the yen here, like if you don't break the structure, then the short doesn't look good. The short outside of that, it pretty much last spot to hedge for this thing. It's really good risk reward, but it's low probability of working out. Last spot to hedge would be here, because it's the last spot of fluidity before the dollar goes for new highs. It's not as good of a trade though. The risk reward is a little bit better, but it's not as good because the probability of it working out is rather low. You said the Kiwi against the dollar, right? Well, that got destroyed. Look at that. I guess it got some profit targets, but it's just I guess somebody asked for it in the past, and I did a example. I'd still consider that equal lows. It doesn't look like longs got punished hard enough there. What do you say you're looking for on this, Tom? Super high time frame lows on the... Yeah, I agree. These are... Oh, you're looking at the index for the Kiwi. Okay. So you're trading the futures, not the CFDs then. Yeah, that's devastating. That looks bearish, man. Looks bearish. By the way, the reason why I'm saying it looks bearish, guys, is because it's the same thing that Bitcoin was doing in a lot of the charts I showed you. Let me invert it. Does this chart look bullish? All the highs are in the same spot. In this case, it would be all the lows, and then the distance between the rest are spread out. So leverage is gonna, by the time we get low again, leverage is gonna start dogpiling in here at looks like around 55. So leverage should start dogpiling in at around 55. It might be the straw that breaks the camel's back, or you might get another small rally, but if it keeps bouncing off of it, eventually it's going to do that. That's like a very classical thing that happens often in a lot of markets. Same thing with like oil. Oil is a pretty good example of it. It looks really similar to the oil chart. The oil chart was this. God, there's the flash crash on oil. So the oil chart, this was back last year. You had all these equal lows, right? And then you had spread out highs. And then bang, it dumped, right? I was expecting a little bit lower, but still pretty good. Same thing, same chart on the Kiwi. All right, let's get back to crypto because I'm sure a lot of people are here for crypto. Litecoin. Litecoin's a bit unfortunate because it really did get fucked when back in October when everything kind of got screwed, but it got screwed probably the worst, or one of the worst. Not as bad as like what was it? ATOM Atom dumped like to 1 cent a coin or something like that. Yeah, Litecoin has been getting punished. It's kind of sad. And you know what's crazy about this setup is it's likely going to get punished again, but if it doesn't, this is a really cheeky play. But keep in mind, before I talk about this, you want to make sure you're seeing what Bitcoin's doing. If Bitcoin shows an imbalance of supply and demand on the high time frame, then this trade's going to get screwed regardless, because it's going to fall. The market sentiment will follow Bitcoin. But let's have a look at this, right? So this is where a lot of people lost their long positions. You can see there's a low here, there's a low here. So everyone's like, don't worry, this is support, it's gonna hold, okay? Well, support didn't hold, the lows fell. But why didn't, if everybody's seeing this as support, right? Oh, it's a fucking Rickroll song, hold on. Okay, there we go. Why didn't the price go further down relative to the movements we've seen in the past? Like, we've seen some big movements on this thing, right? If everybody's selling at the same time, if all the stop losses get hit at the same time, if everybody is getting liquid, why didn't the price go further? So it could that could be an indication of sticky demand or accumulation. All right, now let's look at the context over here on the right. So we never had the proper retest of this. If someone wanted to fill a lot of Litecoin bids, if they wanted to buy a lot of Litecoin, they would need enough sellers in order to match that, right? If you wanted to buy a fuck ton of Litecoin, you can't just hit the market order button. You need a lot of buyers or a lot of sellers to sell into. So that's what could have transpired here, okay? I'm showing these lines as multiple bids because everything is a zone, right? If you're going to accumulate, you're not just going to have one big iceberg. Some people do that, but one big, you could spread out your bids. Your average might not be as good, but you'll still be able to get filled. Okay, so they started getting filled when everybody started to sell, right? Which was at the bottom here, this support. And now what we've seen is develop is we haven't had a proper test to sort of wake up the sleeping giant here. Now, that's good and bad. The reason why it could be bad is because we've got another situation where we have a ton of equal lows, right? So the assumption would be that all these people here, after this whole thing happened, all these new longs and bids and buys coming into the market, view this as support, and so they would sell if it goes below it. So if a lot of people sell at the same time, you do run the risk of the price falling off a cliff. But if the price doesn't, that might be an opportunity. So if we get a clean test here, while not taking out this low or getting very close to this low based off the relative movement in the past, then that looks like a pretty good trade. Because you've got the same thing on the other side, right? You've got equal highs that have never been taken out, so that's fuel for a rally. This one you got some micro equal highs, not too important. But then all the way up on Litecoin, you actually have it. Instances of equal highs, which would give fuel for a rally. So, you know, the risk reward on this would be pretty damn good. But whenever you have good risk reward, you run the risk of the trade not being very high win rate. So say you mapped it out like this. I mean, even if you didn't go for, you could start taking profits in this range here, leaving some of the position open to take some profits in this range here, leaving some of the trade open, very small. At this point, you'd only have a very small portion of the trade open, but for something like that, and that's 69 risk reward, you know, by the time the runner gets closed or something like that. But your average risk reward in that scenario would be fucking astronomical. I mean, one trade like that would pay for a dozen losing trades. You could lose 10, 20 trades in a row. If you hit one of these ones, it pays for all of it, and that's trading in a nutshell. Especially in crypto, because it's so volatile. Spot orders, yeah. So it's like all the leverage longs just got liquidated and stopped at the same time, and because of how arbitrage market making works, that will pull down the spot price. But it'll only be temporary if we don't have enough supply to match the demand. So someone's arbitrage market making Litecoin, they're looking at the perpetuals and they're looking at the spot prices. They're looking at both those two prices and they're farming the spread between it. So maybe the Litecoin spot price is trading at $70 a coin, and the perpetuals are trading at 69.50, right? Or 70.50. So prices on the spot market, the true market, where supply and demand gets actually dictates the movements in the long term, is $70, right? A coin. Well, the perpetual price is at 69.50 or 70.50, just a spread, right? They're farming the difference between the spot price and the perpetual price. So what they're doing is they could either be buying or selling on spot while longing or shorting on perpetuals, and this provides liquidity. This is market makes and provides liquidity in the book. But because that happens when a bunch of leverage market participants do the same action at the same time, in this case it would be selling at the same time, it pulls down the spot price because of that arbitrage market making. But it doesn't affect the supply and demand of the spot market. So it's a temporary move because it's an abnormal move that happened because of a leverage market, but wasn't truly founded in the real supply and demand of the market, of the spot market, which is what dictates the supply and demand in the long term. And then you have an imbalance, and then you have liquidity. Then you wait for the retest of it. Sometimes it works, sometimes it doesn't. And then, yeah. Put on some risk. Cardano? Why is everyone talking about Cardano? What's Cardano up to? Yeah, the volume's pretty lackluster on 88 right now. You have a lot of untested stuff on Cardano, but it might not get tested if Bitcoin just ends up pumping like crazy, because then Cardano is going to come along for the ride. And same thing, looking where people thought support was going to hold, and then you can start building structure down here. It'd look a lot better. If Bitcoin goes high, then we're not going to build the structure. We're just going to go test the topside structure, which would be right here, at least the local one. See if I'm missing anything here on the left. That's all done. Nice. Yeah, that's all done. Okay, so it'd just be the local one. Okay, it has some room to go up, but I have to see what happens at around 45 cents a coin here. If it fails this, then you can start building structure on the bottom side. something like this, hold it, and then equal highs, and then eventually pop it. But it could just overwrite all this. If Bitcoin goes up like 5% or 10%, then Cardano's just going to do that. This is assuming that Bitcoin either goes standstill or only slightly goes up. But my read on this chart in particular is not that good. So my opinion on Cardano in particular, where it's at, I'd take it with a grain of salt. You look at Chainlink. Yeah, we can look at Chainlink. Where's Nixo? Nixo's the Chainlink guy in here. Yikes, wow, it actually pulled itself out of pretty bad structure so far. God, this is almost like a Hail Mary attempt that they're trying. God, this was such a good chart. So this is another, I've showed this example a couple times on Bitcoin, but this is how you could read structure. This is a pretty easy chart. So, well, I guess easy is relative. So let's just mark out the previous lows before we saw the reversal. So there, there, and then all the way up here. So just looking at the lows here, where people saw it as support, price went through it, then you had conviction of liquidity and an imbalance of supply and demand that was created by the derivative market that affected the spot market. And eventually you get the, some sort of rally that comes out of it. I guess you could say it broke the downtrend. And then you want to see if it holds it. So the first area it held it, obviously a little bit messy. We didn't get a new low lower than that low. But it held it. And the next one, it held it. Next one, it held it. Final one, it held it, but then it wasn't able to achieve a new high. Instead, it broke the structure. So it broke the structure, retested it, and then the October crash happened. But it would have went down here, probably not this fast. This is a pretty expedited move because of what happened in October. But it would have went down after breaking structure more likely than not. I just don't think it would have just been one giant red candle like that. Okay, so what's next now? On the bottom side would be rebuilding the structure. And this chart's a little bit convoluted because that giant wick that came in kind of fucks with the chart a bit. But it did happen, so we have to take it into consideration. You see those lows as pieces of art? Yeah, I mean, this is a beautiful chart, right? I can show you other examples of this, but this is like a really easy to read because you can see where the structure got damaged, and then the retest of that damage, and then the failure, or just the giant dump that came in. I can show it to you on Bitcoin, a couple instances of that occurring. Now, here's an interesting, there's some scenarios, right, where the structure gets damaged like this, okay? But then it starts to rebuild. If that happens, then we would have seen the same thing on the other side. And of course, it can only go up or down, but I'm talking about like a big move. You see how this was a big move? Like a big move on the other side, because that's an abnormality, and that's actually what we saw in Bitcoin more recently. Usually a big move. So like, where was the sort of the big battle that took place? It was right here. To sort of dictate what the structure was going to be. Now, there's some silver lining to what happened here. I mean, you have a bunch of equal highs. So if we get back here, short sellers are all going to be dogpiling using this invalidation. They're going to take advantage of this being a distribution zone and rely on the spot whales that are bearish to sort of defend them, but they'll put all their stop losses in the same spot. So that's a good sign. There's more instances of that happening now. Let's zoom in on what's been happening recently, right, in the last couple months. You've got a lot of equal lows here, but I think this Bitcoin rally really bailed out Link here because you're starting to form a structure where, you had a lot of equal lows, you had a lower high. So these highs are further separate, they have further distance between them than the lows, which means that the longs were more clustered together than the shorts. But this candle that we just saw, this green candle that came in that sort of disrupted all of that, is because the green candle that we just saw in Bitcoin that sort of disrupted all that. So these things will follow Bitcoin and move outside of what they technically maybe, I don't know if should's the right word, but what they're more likely to do, they'll deviate from that if Bitcoin has a big move. And Bitcoin pumped quite significantly, and so the technicals on this sort of got overridden. Now, what does that mean? It means that the structure is looking a little bit better because of Bitcoin. Because Bitcoin helped out, the structure is looking a little bit better. You know, depending on if we can get this a bit higher, then you're going to have equal highs on the top side, just like you have equal lows on the top side. That's pretty much neutral. You are coming from a downtrend, so neutral, you typically want to lean towards continuation, but we still have to keep in mind what Bitcoin might do. But the way that you would play this, right, there's two ways, but I guess the way that you could play it is wait for these lows to capitulate. You're either going to get something that happens local, or if it slides enough, it'll test the high time frame, which is this one. You're probably going to get a local on this one, but we'll have to see what the overall crypto market sentiment is. Then you wait for the retest either here, or if it slides, then you wait for the retest here. And the top side's the same thing, right? You're just looking for all the shorts to get squeezed, see that imbalance of supply and demand. If it does happen, it might not happen, it might just pump. But if there is an imbalance of supply and demand, then there would be an opportunity to look for the retest and look for the other side. But really, when you're looking at a chart like this, all you're trying to find is, okay, where do the leveraged market participants stand to capitulate or get liquidated or use stop losses at the same time? And this chart's pretty straightforward, right? You have a lot of lows that are in the same spot, a lot of highs are in the same spot. And you might be asking yourself, okay, well, what about all the people in the middle of the range? What about their stop losses? Aren't those important? Well, they would be, but let's say that they had stop losses in the middle of the range here. They got taken out on this move. They had stop loss in the middle of the range. They got taken out on this move. Now, this might be a factor, right? We'll have to see. But as far as what I can see in the context of the past, you've got 3 moves to the lows that have sort of, anybody who still has a long open from this period probably has their stop loss at one of these lines. But they're all clustered together. So as we get closer to the highs, even if we reject off that, what would that mean? It'd mean the same thing on the other side. If they had their stop losses in the middle of the range, that would infer that they've been taken out. So the stop losses on the other side would be one of these lines. And so they'd get liquidated or stopped out or whatever, but they'd all do the same action at the same time. And I'm talking about the leverage market, right? So the leverage market, when a lot of people get invalidated at the same time, it's going to pull the spot price because of the way arbitrage market making works. Now, when it pulls the spot market, one of two scenarios happens. Either the supply and demand matches what the temporary move was on the leverage market, or it doesn't. And if it doesn't, there's an opportunity. Meaning, if the price gets pulled up because a bunch of shorts get squeezed, the price could continue to go up and there's no opportunity. But if it reverses, then it shows that there was a temporary imbalance of supply and demand that was caused by the leverage market. And then you look to short it because that's a clear example of the supply overwhelming the demand. And then you look for the other side and then you look to long it. But as far as like where it's going to go right now, I don't know. It's really the ball is in Bitcoin's court as to where Link's going to go right now. I mean, it looked beautiful for a while, but yeah, the structure got damaged, like I said, right here, and then just fucking demolished because of the timing of it being around when Binance went down. So this is one of the cool things about crypto is it's very leveraged market, right? Because there's two cool things about trading crypto. The first one is fundamentals for the most part don't matter too much. When you're looking at like Bitcoin, Dogecoin, I mean, there's fundamentals for these kind of quote unquote utility altcoins that matter a bit. You should factor them in slightly, for sure. But like, let's say you're just trading Bitcoin. Fundamentals don't really matter, right? Like everybody understands it's decentralized money, okay? But there's no earnings, there's no balance sheet, there's no income statement or whatever. So it's really all just about the chart. And then the next cool thing is how much leverage people use. So if it's all about the chart and people use a lot of leverage, it means that the chart is not always 100% random. It's random a lot of the time. Like right now, where we're sitting right now is pretty fucking random. These movements on the 1 minute, it's pretty fucking random. But there's moments where it's not because leverage and there's not going to be an earnings call. There's not going to be some big news event that Bitcoin missed its earnings or whatever. Math is math. This is more of a mixture of math and art. It's not, you can't just, some people try and some people have success for a while, like just trying to apply only math. But 99.9% of trading bots, they will fail. Some of them will have success for a while. Really, the only mathematical approaches to the market that are consistent is founded in arbitrage, not discretionary. You can have certain mathematical models that help guide your discretionary decision making, but it's usually just arbitrage and market making where math is going to be the most advantageous. Because a lot of this is not complicated math, right? I mean, it's not, a mathematician. You don't have to be a mathematician to trade, is what I'm trying to say. How do you know it's not random? When a lot of leverage gets flushed out of the system at the same time. So when you look at a chart that has a lot of leverage, when it becomes less random is when a lot of people have to... Okay, so the reason why I say a common stock is random, right, is because you don't know what's driving somebody to sell or buy a spot market. When it comes to a spot market, someone could buy or sell for whatever reason. Maybe they're afraid of a war. Maybe their friend told them to buy this thing. The spot buying and selling can be fairly random, particularly in crypto when there's not fundamentals to lean on. Like, oh, the earnings were good, the balance sheet's good, that means that it's time to buy. Let's all buy at the same time type thing. That doesn't really play into crypto as much. So that's the spot market, right? The leverage market, if you're opening up a leverage trade, what is true? What's true is at some point in the price, you'll have to get liquidated. Maybe not. If you're using 2x leverage going long at the bottom, okay, maybe you're not going to get liquidated. But there's a lot of people that aren't doing that. There's a lot of people using more than 2x leverage. Like Bitcoin, for example, right here. Shorts got squeezed, right? Which means that these positions have to close. And they're all closing at the same time. If they're all closing at the same time, we can infer that this is going to happen if price goes above there. Because shorts that are using leverage get liquidated. If they all get liquidated at the same time, what does that mean? A flood of buys hit the derivative market. So that's what I'm saying. Like, any market that has a lot of leverage in it is less random than a market that doesn't. Because people are forced to take action, whether they want to or not, at a certain price point. And if everybody's looking at the same price point, then we can infer that a lot of people will take action at the same time in the same spot. And then you have liquidity. Like, if we look at the heat map here, which, by the way, this is a rough estimate. This isn't exact data. It's better to use the price. But like this, for example, on Bitcoin at the lows. You see all these equal lows down here? Well, leverage started to dogpile in. This bright yellow line is showing you that if Bitcoin price goes down here, likely hundreds of millions, if not billions of dollars will get liquidated from the long side of the market. So a lot of people will have to sell at the same time, whether they want to or not. Because isolated leverage, right? So a lot of people will have to sell there at the same time, which by arbitrage market making would pull the price of the spot down. But a lot of people getting liquidated on longs in the derivative market in crypto does not mean that a lot of people are selling Bitcoin. Just because a lot of longs are getting liquidated does not mean that people are selling a lot of Bitcoin. Because it's a derivative market. It's not affecting... If you long Bitcoin, you're not buying Bitcoin. You're speculating on the price of Bitcoin using leverage. It's not buying actual Bitcoin. It's a whole different market. Think of it like a prediction market. And the same thing if you're shorting it. If you're shorting Bitcoin, you're not selling actual Bitcoin when you open up a short position. At least that's how it works in crypto, right? So a bunch of people selling a lot at the same, or shorting, a bunch of people having their longs closed at the same time would operate as a bunch of selling coming in. It'd be a bunch of red on your screen over here on the right. These orders coming in, a bunch of red would hit the market at the same time. But that's not actual selling of Bitcoin. What it does, though, is it affects the order books of the derivative market. So it'll push down the price in the derivative market, And then arbitrage market making will come in and take advantage of the difference between the spot price and the leverage price. And that, while they're taking the advantage of the spread between the spot price and the leverage price, they're pulling the spot down to where they're pulling the spot down. Let me see if I can draw this better. Like, this is where all the lows are, right? If price goes down here on the leverage market, because a bunch of people are getting liquidated on longs, which means a bunch of people are selling at the same time, then the spot market will be pulled down too because of arbitrage market making. Let's say that, how can I draw this? These are I've never explained it like this, but stick with me for a minute. Let's say that these two are the spot and the leverage price. So this is a price line for the spot, this is a price line for the leverage market. If the leverage market, everybody gets liquidated, it's gonna push down the price line for the leverage market. And let's say the spot market temporarily is right here. And this happens very fast, in milliseconds, very fucking fast. But the leverage market is right here, the spot market's right here. The market maker will buy leverage longs here and sell Bitcoin here and take advantage of the difference between these two prices until this one gets there. And now there's no price to take advantage of because they're in sync again. And once they're in sync again, then we could see a reversal, because this whole move that pushed us down in the first place wasn't even people selling Bitcoin. It was people getting liquidated on longs. I don't know. Maybe clip that and then rewatch it, because I don't know if I probably explained it too fast, but the crazy thing, right, is when the spread gets so wide that the arbitrage market makers can't pull it back to where it is. But that's happened in the past, by the way. There's been huge deviations between spot and leverage prices for a long. Back in 2018, there was a huge spread between the two, and it lasted for, I don't know, like 6 months. So people were farming that, man, for a while. But it doesn't have, it's fast now. There's big market makers now, big arbitrage hedging market makers nowadays. It happens pretty fast. Like I said, it can happen in milliseconds. They're all competing for that small edge. So the benefit to us as discretionary based traders is we get a lot of liquidity. And we get imbalances of supply and demand, which provide opportunities potentially. But what happens here, right? When the spot price is here, and everybody just got liquidated on the leverage price, right? This spot price catching up with the leverage price happens so fucking fast, like almost instantly. So the takeaway is, when everybody's got the same liquidation spot, when everyone has the same stop loss on the derivative side of the market, on the leverage side of the market, and all of them get liquidated at the same time, that's going to potentially provide an opportunity. That's what we're watching right now. We don't know if it's an opportunity yet, because this is a high time frame thing. I mean, Bitcoin's been consolidating for almost 3 months now. So you have all of the shorts just got squeezed, right? They all have the same invalidation. They all see this as the invalidation. They all get squeezed. Now the question is there enough demand to follow the liquidation? Are people actually buying Bitcoin, actual Bitcoin? Was this move the result of people actually buying Bitcoin, or was it the result of a bunch of shorts getting liquidated, which pulled the derivative price up, pulled the leverage price up, and in turn the arbitrage market making bots match that price in the spot market, take advantage of the spread? And one of the things I look at is, I'll look at the orders a bit, and what I can tell you is a fuck ton of people are buying Bitcoin right now. So there's a good shot that we won't see an imbalance of supply and demand and this thing can fly. The only reason why I'm hesitant is because normally when the volatility index kicks up, Bitcoin will dump, but it didn't. It pumped. So is that a result of? It could be a result of one of two things. It could be because it's a short squeeze, we're seeing a decoupling between the market sentiments, or is there actual small decoupling between the actual markets? Meaning, is Bitcoin slightly decoupling from the greater markets? Or is this abnormality a result of leverage getting flushed out from the short side of the market? I don't know. And that's the beauty of prices. I get to see it happen. And I'll have my answer and I'll be able to take advantage of it after I see how the market behaves. I think a lot of people are wondering that question right now. Look at open interest, spot, CVD, future. I mean, you can look at that stuff, but it doesn't. I'm never gonna take a trade based off of that kind of stuff. Like you can use whatever indicators you want, right? Everybody in the chat probably has their favorite indicator. I've learned a lot of them, if not most of them, and I don't use them. Not because I have like a vendetta against them. I just know they don't work. They'll work a little bit, like they'll help a little bit, but it's marginal compared to using actual, price action. I buy on sunny days and sell on cloudy days. Yeah, I only buy when it's a full moon out. I use astrology to tell me when I'm gonna buy and sell. Come on, you guys don't know about that? Last few weeks, consolidation was hard finding a position. Yeah, I mean, this was a tricky market, man. This was a tricky market. So I can walk you through what made me flip bullish on this market. Like if you're here on the last stream, you heard me say we're gonna likely pop the top, and what led me to that conclusion, because this was a really difficult structure, one of the most difficult Bitcoin structures I've seen in a while. There's certain examples where what was a higher probability to happen didn't happen. Okay, so usually when you're in like this downward move, right? We just had a huge downward move, and then you start making highs. Okay, so you make a high, and then you go for it. Okay, rebound, go for it again, right? Why wasn't this high higher if it was so bullish? It was pretty lackluster relative to the previous action that we saw in the market, right? So why wasn't this? Okay, that's not good. And then again, we go for it again, another lackluster move, showing that supply, I guess, in this moment is outweighing demand. Okay, I see something like that, right? And I think, okay, it's bearish. So if it breaks down, it should go for the low. But in this case, it never went for the low. So now I'm thinking to myself, well, why didn't that happen? The probability of it going for the low, showing that supply is outweighing demand, means that we should go for the low. So that didn't happen. So now I have to start to adjust. And I have to think, okay, maybe demand is stronger than I'm giving credit for here. And then I did a more complicated thing, which is looking at sort of the microstructure here. So the first one was we should have dumped here. We didn't dump. That's already a sign. Next is I'm going to look at market structure. This is, again, one of the more difficult things to do. So I looked at market structure here. I looked at how I normally do it, where I'm looking for where was their conviction on liquidity, or where did everyone lose at the same time. And then I'm looking to see if price followed that. So we never got the proper retest here. I was streaming when this long opportunity was happening, though. But we never got the proper retest of the low, but we did hold this one, right? And then we held this one. And then we held this one. And then it broke. And if you remember, this is the same chain link. When I was showing you the chain link chart, this looks eerily similar, right? So the structure breaks, and then we get the retest, and then we should dump. But we didn't dump. We sat here for multiple days. And that's the second time I saw it. And I said, okay, demand is stronger. We should have dumped here. We should have dumped here. But in both scenarios where it's crystal clear that the probabilities are pointing towards a dump and it doesn't happen, and now you've got equal highs at the top side, so the daily structure looks bullish. That's why last stream I was saying we're going to pop the top. You can go look at the last recording. It's on YouTube. I told you we were going to likely to pop the top. I don't know for sure, and then the next day it happened. But you see how much information I can derive from just the candlesticks. No CBD, no volume profile, whatever indicator you want to fucking use. No order flow. This is just in the price structure. There's a lot you can get from the candlestick chart. And it's not going to come from the 1 minute candles. So if I know, okay, we should have dumped here, right? Why didn't we dump? It's been multiple days. We're still closing above. Then I can go to the 1 minute and zoom in here and try and find cheeky risk reward for longs. I can confirm he said it will pop the top. So this is something I hinted at these last couple weeks I've been streaming, but if something on the chart looks like it has a high probability of happening, and then it doesn't happen, you have to pay attention to that. You have to step out of your bias. Step out of your bias. I don't care if you really want the chart to go up or you really want the chart to go down. The chart doesn't give a fuck what you want. It doesn't care. The market does not care. You have to see it for what it is. And it's really hard to do that in crypto because everybody has a fucking opinion. And when they do have an opinion, they are very hell-bent on their... How do I say this? If somebody is bullish, they are very fucking bullish. If somebody's bearish, they are very fucking bearish. They don't... There's not... If somebody's really bullish in crypto, there's not even a slight doubt in their head that they could be wrong. And the same thing for somebody who's bearish. There's no doubt in their head that they can be wrong. But that doesn't make a good trader. So if everybody is so hell-bent on their position saying, oh, it's 100% we're going to pump, it's 100% we're going to dump, and that's all you hear all day, then you're going to start thinking like that, and you're just going to be culled like the rest of the herd. You're going to be slaughtered. You have to remove the bias. When you look at a Bitcoin chart, a lot of people, I'm guarantee the majority of the people in this chat, when they look at a Bitcoin chart, they're probably looking for everything in the chart that will confirm their bias that the price is going to go up. And it might. It just did. So right now, everybody who thought like that thinks that they're a genius. But there's also people in the chat who are very bearish. And they go to the chart and they look for everything that would point towards the chart going down. And because we pumped, they don't look like a genius today. The thing is, neither of them are geniuses because all they care about is the price going in their favor in one direction. You can't trade like that. I tried for a while, man. It doesn't work. I mean, in a bull market, when everything's just going to the fucking moon, it's pretty fucking easy, right? There's no doubt about that. So you have to remove this like, oh, I need it to go up, I need it to go down kind of thing, or else you're just gonna, drive blind. So what's next? We wait to see if there's an imbalance of supply and demand. Where right now, what's happening on the 1 minute over here, these little micro battles, is very important. I mean, each 1 minute candle isn't important, but whether or not we can hold above these highs and prove that this is not an imbalance of supply and demand. If we can prove that this is not an imbalance of supply and demand, then that means that even though shorts were squeezed, there's still enough demand in the spot market to back run the order and keep the price, keep the float. You want to maintain the float. The float is just what we're at right now. The bids to maintain it. If we can maintain above this line here, it means that not only was there a short squeeze, but there was enough buying of actual Bitcoin to back it up to produce a bigger move. Now, if there isn't, and we do see an imbalance of supply and demand, the next move would be to hedge short and short the failure of it, because that means that there's a good chance we could go for the lows. So the battle that we're seeing commence today, probably tomorrow too, depending on how far high we get today, but could dictate whether Bitcoin's going to be trading under 80K or Bitcoin gets back above 100K and potentially more. So there's two ways you could do it, right, Witcher? You could either take profits here, Or if you don't want to, which I think, it's never bad to take profits once you have good risk reward. But if you don't want to, what you could do is you could hedge. You could cover your longs. So what that would mean is you have longs in profit, right? You could, if price fails this, right, and we see that imbalance of supply and demand, then you can open up a short position against your longs. That way, if your longs get crushed, your shorts will run. If your shorts get crushed, your longs will run. And now you're hedged, and you win either way. I mean, you don't win as much if you were just only long and the price only went up forever, but what do we know about price? It doesn't only go up forever. In this case, I mean, this is multiple months of consolidation though, so there's a good shot that this thing can fly. So far, we've had one daily close above. We'll have another daily in a couple hours, potentially closing above. That's a good sign. 2.5, 3 months of consolidation leading into popping the top. I told you guys a big move is on the horizon. It happens to be to the top side. There's a good chance it'll keep going. Which in turn will pull up all your altcoins too. Most likely pull up all your altcoins, including Ethereum, of course. The leverage doesn't matter as much, Bugatti. It's a position sizing, and that's depending on you. Like how confident are you that it's going to reverse? So you can gauge it. The way I would set it up right now is look for the hedge, but maybe don't use as much position size on the short as the long. Use enough position size on the short with stop loss and profit that you're pretty much risk free. You're pretty much delta neutral regardless of what happens. But you can take advantage of a lot of upside potential if it goes for it. So if it goes low, you make a little bit of money, right? Pretty much you make a little bit of money on the short. You get stopped out break even on the long because the short position is going to be smaller than the long position. But if it flies and the short position gets taken out and your long is heavier, then you're going to make even more. But most people in crypto don't want to hedge, right? You just want 100x long, hope that it goes to the moon. And most people get slaughtered. Let's look at the liquidations. All right, well, this doesn't include yesterday, but in the last 24 hours, 151,000 traders were liquidated. The total liquidations come out at, it looks like, I can't see, 850 million, which that number is a lot bigger. It's likely multiple billions. So the last 24 hours, I'd estimate at least $1.5 billion has been liquidated from crypto. 150,000 people. It's just the nature of the market. You can see liquidations rolling in all the time. Look, these are all liquidations that are rolling in. These are small positions. I could filter it to 100K and above positions. It doesn't want to cooperate with me right now, but that's how you would do it, is over here. Yeah, it's going to happen, right? Never feel bad for longing or shorting or whatever your bias is, because people are going to get liquidated no matter what. Just part of the market. Yeah, it's gambling pretty much. If you're just doing high leverage one side of the market, you're just going to be put in the rinse cycle. You're better off playing blackjack or baccarat. I don't know if that's entirely true, because every once in a while you do see a guy who has like a 100x long, turns like $1,000 into $1 million or something like that on some random shit coin. That could happen too. But to assume that that's going to happen to you is not paying attention to the math, or at least statistical math. Binance founder CZ says reaching 200,000 is the most obvious thing in the world. And what do you think his confirmation bias is, right? He has the biggest crypto exchange, right? Holds a lot of Bitcoin, holds a lot of BNB. Of course he wants it to go to 200K. Oh yeah. Another person who has a pretty big bias, but I kind of respect the conviction of this person, is Sailor. MicroStrategy finally pumping a little bit here after being absolutely slaughtered for the last couple months. The interesting about the MicroStrategy pump too is if they can hit the precipice of when shorts start to capitulate, it'll actually fire this thing up a lot. Because a hedge a lot of institutional guys are doing right now, because it's buzzing around, rumors at least, is you buy Bitcoin and you short MicroStrategy as a hedge. But if Bitcoin starts to fly, MicroStrategy likely going to fly too. And then once it starts putting the pressure on those hedges, then it can really get going. But it might take a while. I don't know if it's going to happen anytime soon. But like, say Bitcoin gets another all-time high, MicroStrategy probably going to be flying, because all those shorts are going to have to start racing to the exit, and there's not going to be enough liquidity on the sell side. So you get a short squeeze like what happened with GameStop. Yeah, man, that's how you. That's how I was reading the structure. People have different ways they want to approach the market. More power to them. And you don't need to hedge, by the way. If you don't want to hedge, you want to take profit. But if you want to keep your exposure on the long side without taking any profit, then you could hedge. You could technically do both too, by the way. You could take profit and hedge. But that's like really lowering your ROI, which is fine. I mean, Bitcoin gives a ton of ROI anyways, much more than the fucking any other market you could trade. I mean, what goes up more than Bitcoin? Nothing. Altcoins maybe, when there's an alt season. Pokemon cards maybe, I don't know. But yeah, until we get below these highs and we start closing days below these highs, then it's up. We're still in the upward movement. Until the market proves otherwise, it's still up. Silver, yeah, silver's been on quite a fucking tear. There's some new people in here. I just want to do a slight brag real quick. And I'll show you what I was looking at, but I called the silver rally here. It's in the recording. It might be lost in the void. S-Case might have the recordings, but I call the silver rally here. That was my one little brag, but overall though, Bitcoin's still doing way better than silver. Like it really depends what metrics you want to cherry pick, right? If you look at like the last couple financial quarters, yeah, silver's been crushing everything. Or if you look at the last, 10 years, Bitcoin's been crushing it. It just depends on, which data or which time you want to sort of cherry pick to say, oh, this is better, this is not better. But if you look at, let's say that we just look at the origin of when they hit the public markets, yeah, nothing beats Bitcoin. Maybe Dogecoin and some other alts, maybe. But I don't think anything beats Bitcoin from the origin of when it was publicly traded on the markets. So yeah, so the point being is like, the ROI is already so ridiculously high compared to legacy ways of investing. It's a cringe way to say it, but yeah, I mean, you're going to get a lot of ROI. So you could use a lot of hedging tactics, particularly because a lot of people think Bitcoin is so speculative that you should be using a lot of risk management tools because people believe that Bitcoin's going to go to zero or whatever. I don't know, it might, probably won't. The odds of Bitcoin going to zero, if you put that shit up on Polymarket, you'd probably get 0%. It's not going to go to zero. If it's not going to go to zero, eventually it'll probably get another all-time high. The question is, will that all-time high be a year from now, or will it be a month from now? I think that's what people probably come in here to watch, to hear my opinion on that. But all I can say is, I have to look at the structure month over month, week over week. Like, I have to see if it looks good, then I can say it's going to continue going higher. Like right now, it looks good until proven otherwise. Gold, yeah, I mean, gold and silver's in the same bucket right now. I mean, there's no There's slight things that look like it could slow down here or it could consolidate here, but as far as like dumping significantly, there's nothing that really shows me that just yet. Like there was a breakage of structure here that happened, but it didn't dump, so that just means a big move. Anytime you get to that precipice where you break the structure, you're either going to get a huge dump or a huge pump. You're going to get a lot of volatility one side of the market. But it's hard to say that gold's going to reverse. If I start seeing like certain structures that I need to see on a high time frame, like this is kind of a doomsday thing for Bitcoin, but if I see this on Bitcoin, we hit the supply zone on the top side, right? So we get to like 109k to like 113, 112, 113. We get here and we just see this on Bitcoin. Yeah, I mean that could be the end of, that could be a not the end of the rally, but a pretty deep bear market, because you've got a lot of fragile stuff on the bottom side here. So like this could theoretically lead to like, I don't know, trading down at like 60k or something before it starts to rebound. Maybe lower, 50, 60k. I could see that as possible, but I don't like to speculate this far into the future because nobody knows. But if I had to, that's how I would see it. But gold hasn't printed this kind of stuff yet, to answer your question. There's no super obvious structure like how it is on Bitcoin that would lead me to believe that gold could have a major drawdown like that. Bitcoin, that's starting to become in question a bit. We just have to see what happens when we get to the deeper, I guess to make it simple, the deeper bear territory, supply zones, whatever you want to call it, and then look at the fluidity. So if bulls are going to push up into the top side of the range, which is here, the relative range, then we want to see how decisive the victory of and the bears win. We want to see how decisive the victory of the bears are. So if the bears end up winning it and it's clean, then you can make the argument that the next time they battle, the bears will win again. And with a fragile structure like that, that could crash it down to like 50, 60k. But if this is like a sloppy battle up here or something like that, then it probably just means all-time high Bitcoin. I mean, I'll let you guys know my opinion if and when we get closer to it and I see what kind of structure's forming and I see, you know, if it looks bearish, I'm going to say it looks bearish. If it doesn't, I won't. But these kind of things can change kind of quickly, because if you guys remember when we were here, I was leaning a bit bearish, if you remember. But those two separate occurrences where we saw, okay, it's supposed to dump here, it didn't dump, and then it was supposed to dump here, it didn't dump, okay, there's too much demand, it's going to pop the top. And I know that I was sort of flip-flopping a bit, but that's because the structure was flip-flopping. You know? Like, this looked like it was going to dump, it didn't, okay. This looked like it was going to dump, okay, it didn't. That's too many examples of it looking like it's going to pump, okay, it's going to pump. And the last stream I said, it's going to pump. Or it's likely to. I can never say for sure it's going to happen, but flipped bullish. And now the way that I would return to being bearish, like I said, is just daily closes below this. Like a big rejection with daily closes below this, I flip bearish. Until then, though, we still go higher. What are your thoughts on ETH? I got some big money coming in. I was thinking to soft stake at 5% yield. 5% yield is pretty good, especially if you, yeah. I went over ETH, but it's still at the mercy of Bitcoin, but the ETH structure has gotten significantly better. Just look at these two charts side by side. The one on the left is Bitcoin. The one on the right is Ethereum. Look at the similarities here, equal highs, and then look at the lows. Now, when you look at these, right, Bitcoin's already popped the top. So if Bitcoin continues this rally, what do you think Ethereum's going to do? Yeah, it's because of Bitcoin pulling up Ethereum, it's built the same structure. So Bitcoin, if Bitcoin stays above 95K, we don't see daily closes below 95K, Ethereum goes to the fucking moon. Ethereum goes to the moon. Well, at least until we see what happens at the supply zones on Bitcoin. At least until we get here. Until if we're trading above 95K and we're not at this spot yet, then Ethereum has room to go up. And what does that mean for the rest of the altcoins? It means the rest of altcoins will likely go up too. At least the major ones. I don't know about the meme coins. The meme coins, it's a whole different fucking arena. That's just like playing a slot machine or whatever. I guess that's not true for all meme coins. Once they get to a certain market cap, then it's worth paying attention because they're going to have a lot of leverage too. But if it's a meme coin that doesn't have any perpetual contracts, it's random how it goes. It could go up or down at any moment. Once the meme coin gets big enough, like Dogecoin, where it has a ton of leverage in the system, then I can predict it better. Until then, I don't know. Up or down. Flip a coin. Just people rug pulling each other. Imagine if I just started having meme coins on the screen, or I made my own meme coin. I was like, guys, I'm buying this meme coin at 100K market cap. Then all of you guys buy it, and then once all of you guys buy it, I just sell it. That's what people do in the meme coin markets. It's fucking polluted the crypto Twitch category for sure. Guys, I'm buying this meme coin. Don't worry, I'm gonna hold it. And then just everybody in the chat buys, and then I sell. But I don't do that shit. Like the New York City token, yeah, the fucking, I don't know if you guys heard this, but the former mayor of New York City created a meme coin. I don't know what market cap it got to, right? It might have gotten to like the mid 8-figure market cap, and then just rug pulled it. I don't know if he actually rug pulled it, but it went. This is how most meme coins go, okay? They go like this. That's how they go. Now, some of them that have cult-like communities can pull themselves out of it and go for more. And that happens every once in a while, but it's usually once in a blue moon. One out of every, I don't know, 10,000 meme coins will be able to do that. So knowing which one is going to be the one to do that, shit, that's not a game I want to play. If you do want to play the meme coin game, though, the way you do it is, so say you buy, like, I don't know, here or something. Anytime you get a new leg, sell a portion of it. Sell a portion of it, sell a portion of it, sell a portion of it. And then if it does become the next big Dogecoin, you're still going to have a very small percentage of the original position, right? And that very small percentage of the original position will actually, if it becomes a Dogecoin, will be more than everything that you sold before. But if it doesn't become the next Dogecoin, which is the more likely thing to happen, you'll have sold and took profits in the event that there's a rug pull. That's how I would do it if I was trading meme coins. Buy in heavy at the start, no DCA, and then multiple profit targets. The only reason why you wouldn't take profit targets on a meme coin is because your greed is completely blinding you. But every once in a while you get a coin like Fartcoin, which is a crazy fucking name that just goes to the moon, right? Or Pepe the green frog that just goes to the fucking moon. It happens. I'm not going to be the one to say that be able to pick the next Pepe, though. And somebody who claims they can pick the next Pepe, they don't fucking know. They might believe that they know, but they don't know. They could be a lot better, though, than some people at finding it, that's for sure. I guess if your skill set is being able to find really good opportunities, and you're better than most people at doing that, then the final step that you'd have to add to that is risk management. And the final step would be risk management, so that you're really good at picking meme coins, but you only risk 1% of your account on each meme coin that you think is going to be the next Dogecoin. Then you got 100 shots to be right. And all you need is one of those meme coins to go to the moon, and it pays for the other 99. It's the same thing in trading, by the way. Very similar in trading. Because how often do we want to be right? And as a result of wanting to be right all the time, we go for low risk reward. A lower risk reward trade in nature is just going to be a higher chance of it working out. Let's say you have a 1-to-1 risk reward, right? It's more likely that this trade is going to win and go to the top of the white box than the bottom of the red box than a trade like this. It's way more, so the price is right here, right? It's way more likely that it's going to hit the red box and it's going to go to the top of the white box. But if you use risk management, then you could take 4 of these losses, and all you need is 1 to pay for all 4 of the losses. And then some, because it's a 10 risk reward, so, and then some. And then a lot, actually. But if you want to be a scalper, that's the nature of scalping, is doing this. It's being able to get punched in the face 4 times and then land a knockout to pay for all the times you got punched in the face. Would you place 300k into ETH? I don't know. It depends. Like, is 300k everything you have? You just want to scale into one coin hard, right? You're just saying, I mean, not financial advice, dude. Any financial instrument from Ethereum to silver to gold to the S&P, any individual stock like Tesla or Apple or whatever. If you go all in on any financial instrument, you run the risk of it going down and getting fucked. Okay, so you're saying 300k is not a lot for you? Then yeah, I mean, Ethereum looks pretty good. You just have to wait to see what Bitcoin does. Again, not financial advice, but just know that anytime you invest in any individual, instead of any individual equity or financial instrument in general, and not the index, you will run the risk of it not working for you. Now, there's certain things like legacy where something like Bitcoin and Ethereum have gotten, people will say, too big to fail, right? Too big to fail. There is some validity in those statements. Once a market cap gets to a certain size, it's pretty hard for it to fail. Because there's legacy. And legacy runs a lot longer than maybe it should. Like, think of any great empire in history, including the American Empire right now. Like Rome, for example. Rome went on a lot longer than maybe it should have. But it's because it had the legacy. Like when you look at, let's say like the United States against China, right? Maybe there's a lot of fundamental reasons why China should have already overtaken the United States in gross domestic product. You could argue a lot of different key metrics that would point towards, okay, well, why isn't China already overtaken the United States? It's because of legacy. The same thing for big market caps. Let's say that Nvidia missed its earnings again and again and again and again. It would still have a pretty sizable market cap. Full port shrimp farming stocks, the future of protein. Are they saying that bugs are going to be the future of protein? Because the input cost is so low? I am 100% against that, but I think that's what they're speculating it to be. I guess shrimps are just water bugs, ocean bugs. That makes sense. Yeah, man. I mean, it's up to you. It's your money. You do what you want, not financial advice. Do I think Ethereum has a shot at rallying like a motherfucker? Yeah, I do. But Bitcoin needs to lead the way. I could see Ethereum making all-time highs. My question is, are you going to be upset if it takes a year? If you're going to be upset that it's going to take a year before we get new all-time highs, then don't do it, because there's a chance that could be the case. What is the reason Ethereum is not at all-time high when Bitcoin did? That's a good question. I don't think there's like a easy answer for that. But Bitcoin's been around a lot longer. Again, going back to the legacy thing. Ethereum hasn't been around as long. I'd say one of the biggest ones, honestly, is the hedge play that's been... So the classic hedge in crypto is you bet that Bitcoin's going to go up, and then you bet that Ethereum's going to go down. And then, you know, if they both go up, then you make your money on Bitcoin and you cut your losses on Ethereum. Or if they both go down, then cut your losses on Bitcoin and make your money on Ethereum going down. I mean, people, honestly, there's probably a million different answers for that question, because people say like, oh, I mean, there's probably better fundamentalists in here when it comes to crypto, but like, whatever reason, there's so many reasons when it comes for that. But the way I look at it is just the price. I'm not trying to assign a narrative to it. If it looks good to pump, it looks good to pump based off the price structure and the price action. That's it. Anything outside of that, people will want to assign a narrative. You don't have to worry about narratives too much. It's like trying to trade the news, right? Trying to trade the news and not the chart, you're probably going to be on the wrong side of the trade. All the news does is it expedites the move, because it introduces more market participants. So let's say that something looks like it's going to go up on the chart, and then bad news comes and says XYZ happened, but the chart looks like it's going to go up. It's going to go up a lot faster. And you're going to be like, why did it go up? The news said it was going to go down. Or vice versa. Like the news could say, oh, this thing is really bad, but the chart... Or the news could say, yeah, this thing's really bad, but the chart... Sorry, I'm losing it. You get the point, though. It's usually just the opposite of the news. Or sometimes they'll align together. Sometimes you'll have... The chart looks like it wants to go down, and the news says it's going to go down, and then it'll work. But it really all just comes down to what the chart says. At least in crypto. A little bit less in individual equities, because old heads still have a stranglehold on that market. They believe that, fundamentals are important, which they are, because you have stock buybacks and whatnot. But at the point that we're at now with the price to earnings ratios across the board, it's the same shit. Like it's every financial instrument that has been doing good, like the Mag 7, for example, every like equity in that, the PE ratios are so crazy that it's almost similar to Bitcoin in the fact that it's just a greater fool theory. You're buying because you think you're going to be able to sell to somebody else at a higher price. And then people will blind themselves and say like, oh, but this company's a really good company. Let's take Apple, for example. Apple's a really good company. They make a lot of money. Yada, yada. They're going to keep making a lot of money in the future. The phones are never going away. There's not going to be a new competitor that takes phone market share from them. Whatever they want to say. Once the PE ratios hit extreme levels, it's degeneracy. The PE ratios on Apple are to the point now where it's like, you're just buying Apple stock because you want to be able to sell it when you retire at a higher price. Not because you believe in Apple. You could trick yourself to say like, oh, I believe in Apple or whatever, but that's what it comes down to. Like, Apple's a great company. I'm doing it because I love the Apple products. That's just shit you tell yourself so that you can buy at high PE ratios. What's up, Traxy? It's no different with silver and gold, too. Silver and gold is the same shit. So it's just kind of like, what Ponzi do you want to bet on? What cult do you think is going to take the price the furthest? And honestly, when we talk about cults in the crypto market, the privacy coins have fucking diehard cults. That's why everyone's talking about Monero, right? Monero's got a diehard cult behind it. Same thing with Zcash. But nothing's bigger than Bitcoin and crypto. That's the biggest cult. That's why these meme coins, like, they might get to 100 million market cap or something like that, right? But their cults are not forged in fucking iron. Like, they're not forged over time. A meme coin that has an existence of 1 year cannot compete with something that's had an existence of 10 years and is still around. The people that are still holding on to Ethereum, even though Ethereum's been in a sideways market for 4 years, those people are going to let Ethereum fly once it breaks out. They're not just going to full sell everything once it hits all-time high. They've been waiting for 4 years while they watch the meme coin guys just dominate the market. The same thing that happens with silver too. Silver's the same shit. How many people have an uncle or someone, you know, that's older than them at some point in their life was like, you know, silver's going to go to the moon. And then what happened? Silver stayed in a sideways market for decades. Do you think those people that were holding silver in a sideways market for decades are just going to start selling the second that the rally starts? Well, that's why the chart looks like this. There's so much of a believer in silver, they're not going to sell. That's why they can't find enough supply to match the fucking demand. And now you have all these banks underwater because they're trying to hedge against, they're trying to hedge their silver. You just need a community that's die-hard enough and has been around long enough that's not going to sell when they see the first, when their unrealized profit hits a certain number and they're just staring at their unrealized profit like, okay, I gotta get out. No, these guys are fucking holding for the long run. How long you been trading? Almost 9 years. And by like, I've looked at the markets before that and, like, you know, done stuff, but like actively in the markets, not just, you know, sideline stuff where it's really easy. The hodlers, yeah. I mean, think of the only cults that really match Bitcoin is like the gold and silver cults. Because that's like, the gold's been around since like antiquity, right? Same thing with silver. Those are 1,000-year-old cults. They have seen the rise and fall of empires, passed down through generation. Like, the knowledge is passed down from generation to generation. You know, don't trust the currency, trust the hard assets. That knowledge has been passed down for thousands of years through family generations. All your forks and spoons are worth more. Yeah, Bitcoin's flying. I don't think we got a bottom wick on that 4 hour, did we? 4 hour just, oh, we did. Okay. It's a nice start so this is the last 4 hour before daily closes. What's up, BD, toe? Can you put a strong upward arrow? I only put those arrows if I really believe it. Because if I just put those arrows to, like, you know, then they wouldn't work as often. Witcher's commenting, because sometimes I'll put an arrow on the chart where I really think it's going to go up, and then it does. But the efficacy of the arrows is going to go down if I just put it all willy-nilly. I'm only going to do it if I really think it's going to go up. I mean, in this case, we're pretty close to the next daily close above. That's already a really good sign. So that'd be a second daily close above. This thing doesn't really show any signs of slowing down. Now the alts are starting to pick up. You see that on the watch list on your alts? They're starting to pick up a little bit because risk on is back on the table. Whatever you do, do not play the Pump It Up song now. Speaking of diehard communities, a lot of the people in this chat have been watching the stream for years now. And they always come by. Shout outs to the OGs in the chat. Yeah, BD, I got some. I'll tell you where the stop losses are. People saying USD is crashing because silver and gold is up is funny, but the logic of the dollar, yeah, you know. And as far as like the dollar crashing, are we talking about it crashing versus other currencies, or are we talking about inflation? Because I'll show you an inflation chart. Here you go. Here's an inflation chart. Just have to smooth it out a bit here. I'll put it on the monthly. There we go. That's an inflation chart. This is the S&P 500. All-time highs versus money supply. But if you're wondering, like, is the dollar crashing? Yeah, I mean, the dollar's been getting slaughtered. But what about the dollar against other currencies? That's this chart. This is an actual chart of dollars against other currencies. It's a U.S. dollar index. So it's all the other major currencies against the dollar. And I'm bullish on that right now. I'm bullish that the dollar will do better than the euro and the pound. I think we've hit a local bottom probably for, I can't time it, but once we get above 102, then I can change. Once we get here, then I can start to change my opinion on it. Once we get here, then maybe if we see like a big imbalance, then we could see the dollar do worse. But for right now, I still think the dollar is going to do better than the euro. The only sleeping giant right now, though, is the yen, because the Japanese central banks keep hiking up interest rates, which in theory should lower inflation, which would make their currency less scarce. Or more scarce in the near future. There we go, Biddy. We're pumping a little bit. At least relative to the dollar. But this U.S. Dollar index isn't just compared to the yen. Obviously, the big one is the euro, the pound, and all the currencies. But so what you could take away from that is, if I think the dollar is going to go up, and I think the yen is going to go up, what does that mean for the euro? It means it's going to get slaughtered fast. But why? I mean, monetary fiscal policy, I guess. I just need to look at the chart to be able to come to that conclusion. But I mean, I don't think it's any surprise that just like the United States, Europeans they like debt, and they like to inflate their currency. So if dollar's likely to go up, yen's likely to go up, euro and the pound might be likely to get slaughtered. We'll see, though. I don't know. At least exotics will get slaughtered, but we've already seen that with the Iranian currency, right? Exotics are going to get slaughtered because they normally do. But what about the sterling, and what about the euro? I do owe you guys a game of marbles, you're right. You're right about that. Traxy, you're a bull on the dollar, right? What do you think about the yen because of the rates being hiked in the Japanese central bank? I guess I should ask, where do you think the euro is going to go? Because you're biased? Why are you biased towards the dollar, then? What makes you biased towards the dollar? Oh, because you hold US bonds. But look at this, Traxy. It's the same kind of divergences you look for on Bitcoin, right? How you look at like the insignificant higher highs that we've seen on Bitcoin, and dollar's got the insignificant lower lows going. Yeah. You think looking at the euro against the dollar is the best way to do it? Yeah. I get that school of thought. A lot of people think the best way to do it is just look at the euro against the dollar. It is the biggest market in the world, the euro against the dollar. At least the highest volume. I don't know. I don't think there's anything wrong with looking at like pound, dollar, dollar, yen. What are these trend lines? Yeah, we got the trend lines out, guys. But just because the dollar's going to go up against other currencies, in my opinion, doesn't mean that inflation's going anywhere. I think that inflation's more under control than it has been in the last, I don't know, 5-6 years, but it's still not under control because it compounds. Never underestimate compounding. It's a big, big thing. The alts are starting to catch up a bit here. Look at my guy Rune trying his best out here. Look at that volume. We're finally getting a little something out of Rune. Come on now. Pump it. This chart just looks so scary if you've never seen it before. Just like a sea of red going down. It's an avalanche. But look at that volume. Coco could give a good trade. Oh, you're right. It's actually at a pretty important spot right now. So it looks like, yeah. Did you guys take this one? I didn't. I haven't looked at this probably in... Looks like I haven't looked at it in months, but that worked out. That didn't. It's at the last, pretty much, Rune looks like Luna's cousin. It's at the last spot right now, SK's. Latvian sniper. Let me just zoom in a bit. Yeah. It's pretty much an equal low though. So if the equal low meta continues, then chocolate can rally a bit, but I don't know. It's kind of risky. Regain with bull div. There's too much. I guess you could get a weekly bull div on this thing. I'm just not a big fan of weekly. The daily, I think there's too much data for the bull div. Yeah, there's too much data. But the volume's really nice. Is that what caught your eye on this? Latvian sniper, is the volume on it? Yeah, it's nice volume. Yeah, I mean, this is a really straightforward trade. It's like, it's one of those trades where the probability of it working out isn't very high, but if it does work out, you make a lot. Let me just look at the structure real quick. It's kind of hard to see it. It's not very fluid on the top side. You have a lot of equal highs as well. This is the last area of fluidity here. So then this. Okay. And maybe this. Yeah, I mean, even if you're not being too aggressive, you could look for like the mid. Yeah, you're looking at like 7 risk reward. You use algo-based Fibonacci's? No. The only time I use Fibonacci tools is if we're in price discovery. I just use retracement. But yeah, I mean, the trade's pretty straightforward. You get like 7-8 risk reward. But a 7-8 risk reward trade obviously is going to lose a lot of the time. Maybe even 3 times, and then the one that works out. The fluidity in this range is dog water for the bears, though. So that's a good sign. Hold on, this music's a little bit too slow. Oh, then it kicks up a bit. Sorry, let's play something a little bit more hype. Yeah, I see what you're looking for here. This would be a banger trade because since it's fragile, you could probably get more than 8 risk reward out of it. Yeah, you can get a lot more out of this. Okay, front run. Yeah, you could break the bear structure on this because it's already been tagged. Pretty much everything's done. So actually your first profit target here would be where you start to crack the structure, and then you want to see something like this, and then send it. That's if it works out and the low doesn't fall through. So you can see by these 3 arrows here, I'm showing that it's very likely this low could fall through, but if it doesn't, it can fly. Just trap all the shorters in the same spot and then reverse it. Good volume. I like it, I like it. My only concern though, Lavian, is this is like pretty much equal lows. So anybody who has a long right here is sweating bullets, and if they close, then we'll get a new low. You get stopped out. But this is the chocolate futures, the cocoa futures. A little bit of a divergence here. Look at VWAP. For the most part, dude, I've learned volume weighted average price. I've learned a lot of these tools that you guys are asking about. They lag. First off, they lag. Second off, they're not very consistent. Like, you could use a volume profile, you could use a million different volume tools. The only one I really look at is vanilla volume, and it doesn't influence my trading to the point where I'm only going to take a trade because the volume looks good. VWAP's a lazy man's market making tool that needs to dump a lot of stock for a hedge fund, but is confined to do it in increments. They can only dump so much in certain time increments. Anytime the price touches the VWAP, then they'll sell some more or buy some more. Like old school hedge funds who probably are not around anymore because their approaches weren't that good, will be like, oh, based off our fundamental analysis, we're under the assumption that this individual stock is going to go up because of XYZ reasoning, you know, whatever reason they come up with. The earnings are going to be really good, the balance sheet, whatever. There's news happening on this side of the world, or whatever fancy fundamental approach they take. And then they want to buy with size, right? If they want to buy with size, they're not allowed to move the market that much. So they have to do like, you know, incremental stuff. By the way, I'm not an expert in this stuff at all. I don't run a hedge fund. This is me looking from the outside in. So they don't really lean on technical tools at all, right? They don't technically use charts and price charts with indicators and stuff. But like an old school method would be just using the VWAP to buy and sell based off. And that's why it got really popular with retail traders, because they could see the price bouncing off the VWAP. But that's just accumulation distribution by institutions. And that doesn't necessarily mean that it's not going to go through the VWAP. I mean, if you're being objective and you're looking at VWAP, how many times has the price gone straight through the VWAP? And you don't know when people are accumulating or distributing for the most part. You got the insider, call up the insiders. It's usually until after the trade's done. Then they'll go on the news and be like, oh, this looks amazing. Everybody go buy it after all their positions are filled. And then while retail's buying it, they're dumping the position. Have enough liquidity to exit it. Yeah, like most of the indicators though, like that's old school stuff. Even a lot of reading price action and price structure, that's been around for a decent amount of time, but a lot of the time the old school methods are not effective. So At least in my opinion. Some people that follow like inner circle trading or whatever, ICT, they still think those old school methods are good. And maybe they are. I've never found much use in them. But let me see if I can explain this simply. It's not the best example on Bitcoin because it's been so messy lately. I'm trying to think of a good example. XRP is one, I guess. So like, a level is only important if the price hasn't gone through it. That's sort of the methodology, right? So this level wouldn't be important anymore because the price went through it. Instead, we should be looking here for like a fair value gap or something. Or whatever, I don't know what I think it's fair value gap. So they'll like put a big box here. And they'll say, oh, it's because it opened and closed here, there's whatever. But if you look at it, if you did actually consider this level as still being valid, even though the price went through it, then you can see here that you can snipe it. And the value of sniping it is you can be wrong way more often because your risk reward is so much higher. So the risk reward on here could be huge compared to being like, all right, we're going to start dollar cost averaging in here. Because now you've got a big zone and your risk reward is not very good. So you better be right. Whereas if you go for really cheeky risk reward, you don't have to be right very often. You can be wrong plenty of times. The last missing piece that most crypto people miss is risk management. And the reason why risk management is important is because there's no trade that's ever guaranteed. It's all probabilities. No matter how much time, you could put 50 indicators on a chart. You could go down the rabbit hole of trying to find a system that never loses. And that will be an endless journey. Every system, every trader, regardless of how good they are, they will lose trades. So you have to accept that. Even investors, they will lose. Some of their picks are going to lose. If you're in the game long enough, it'll happen to you. So instead of chasing this rabbit hole of like, oh, if I just add more analysis, if I just do more, I just need to hire more people to look at different angles of the market. I just haven't looked at enough angles of the market. You're going to be going deep down a rabbit hole. And that rabbit hole has no fucking bottom to it. You're going straight into the abyss with that. So that's why, because when I started, I hated losing so much. I think this is natural for all humans. We all hate to lose. But when I started, I wanted to look at every indicator I could. If a trade lost, I'd go back and be like, okay, let me see what other indicators I could have added here so that I could see it better. And oh, it's this indicator. If I would have used this indicator, I would have seen that this trade would have lost. And, at the end of the day, you just have to accept that sometimes you're going to lose trades. And you have to accept risk management. It's one of probably the hardest thing outside of strategy, probably the hardest thing as a trader is accepting this idea that you're going to lose trades. You will lose trades. If somebody has never lost a trade, that is a curse, not a blessing. Because guess what? At some point, they are going to lose a trade, and they're going to size in with a fuck ton of money because they've never lost. So why not just, the thought process is, okay, I've won all these trades. I haven't lost. So why don't I just bet more money? Why don't I put more money into it? Because if I put more money into it, I'm going to make more money. I've never lost, so it's a foolproof plan. They keep doing that, and then once the loss comes in, it blows up everything. How many people in chat have gone through that? I've definitely gone through it. Not blowing up everything, but a sizable chunk when I started, for sure. Oil fell. Yeah, that's the Dalio squad is shorting oil right now. So instead of needing to win every trade, the opposite of that is how you become profitable. Once you accept that losing is part of the game, that's when you get better. Just look at this logically, right? The same example. There's two trades here, right? The first trade is 1-to-1 risk reward. So you're risking 1 unit to gain 1 unit. All you got to do is be right, 55% of the time after you include fees and commissions, and you're a profitable trader. But this method is death by 1,000 paper cuts. And the reason people do this method is because they don't want to lose. Some people will even do this, right? They'll 0.5 risk reward. That way I win, I win the vast majority of my trades or whatever. But what it comes down to is actually going for this. Because in this, you're going to lose, right? You're going to lose. And then when you win, it pays for these losers. And with this methodology, you're allowed to lose a good amount of times and still make money in the long run. Not only that, but if you're scalping, right? Let's say you're scalping on the 1 minute, and when you have a winner, you're only absorbing a small amount of what that winner could be. Like, let's imagine you get the 1 risk reward, right? And then the position you check back later and you're like, oh shit, it did so much more. I locked it in, right? I locked in the profits, but what did I leave on the table? I mean, sometimes you'll lock it in and it'll reverse, right? But the market doesn't always do that unless you're trading like Forex. I mean, a lot of the time the market will trend. So what could you do? I mean, you could take multiple profit targets. So now you've locked in some. Lock in more if it keeps going in your favor, lock in more. And then you move this, after you get the first one, then you can move the stop loss into profit. So you've locked in the first one, let's say 2 risk reward, 3 risk reward, whatever, maybe 4 risk reward if you're really good. You blocked in 2, 3 risk reward, then you move the stop loss into profit, and you see if you can get any more out of it. And when I mean move the stop loss into profit, this is also a huge misconception. Moving the stop loss into profit when you have a trade that's going in your favor seems intuitive, like, okay, I've locked in the win no matter what, because my stop loss is in profit. That's only true in a vacuum. That's only true if you're only taking 1 trade, and that's the only trade you're taking for the rest of your life. 1 trade, it happened to go into profit, I'm going to lock it in. But not every trade is just going to run into profit. What about the trades that you get filled, right? And they're just immediately in the red. How can you move your stop loss into profit if it's immediately in the red? So if you account for these losses, and you're cutting your winner short by moving your stop loss into profit when you have a winning trade, and you're cutting that winner short, in this case, you've won the trade, that one individual trade, but you're not going to be able to pay for these ones. Trading is literally like, who can survive taking a bunch of small losses long enough to catch the big monster? Or if you want to be a swing trader, which is what I kind of prefer these days, you don't have to take that many losses. You just have to, it's not as brutal. But if you want to expedite your ROI, and you want to scalp and stuff, then this is of paramount importance. But not every trade's going to be a monster either. That's why you can partition your profit targets. So you locked in some, and then let's say the trade goes to the fucking moon, and you have your runner open, right? One of your profit targets you just leave open at 20%. So you've locked in 80% of your profits in this white box. The last 20%, you just let it run. That last 20% could get really, really big if it goes to the moon, and then you can start to look to short against that 20%. So now you've got a short position, same thing on the other side, right? So this, since it went to the moon, the 20% is massive now. And now you're hedging against it. You lock 80% in here. And if you're bullish on, let's say you're trading something that you're really bullish on, then this short position can be a smaller initial size than this. Like this position that you longed with can be a lot bigger than the short position. This is like a smaller short position, just as like a hedge. You lock into 80%, right? And then you have 20% to run. Well, now you're in a position where, let's say the market's here, you still have this monster open. Let's say you bleed your stop loss up here or something. You still have this monster open. And now you can bleed the short stop loss up to here or something. And now you don't really care where it goes because you've got a monster long open. You have a profitable short open. You're hedged, and you don't care if it goes to the moon or if it goes to doom. You'll make more money if it goes to the moon because, like I said, if you're bullish on the market, then your long position would be bigger than your short position. But it doesn't matter either way. If you do this repeatedly, then you'll have a bunch of these 20% positions. And once price hits a certain point, you'll get tagged out of a lot of them, and you'll have a bunch of your 20% short positions. And if you get tagged out of a lot of your longs, now you're what's called net short. In this case, where the price is right here, you're net long, because you have heavier long positions than short positions. But let's say you have a bunch of stop losses here for your longs, and price does this. Well, you've just lost a lot of those monsters well into profit, right? But your total long exposure has become less than your short exposure because of how the price moved. And then you'd be what's called net short. And then you repeat the cycle. Now, this sounds simple, right? But you have to factor in all the times that it's going to go to the stop loss. All the times it's going to go to the stop loss. Because it will. What's up, Leo, in the YouTube chat? Oh, we got another subscriber in the YouTube chat. Welcome. You missed most of the stream. Thanks for the sub. Yeah, I mean, it's all going to be recorded and posted. I have to ask, why not use stochastic? Oh, my chat just fucking bugged. I have to ask, why not use stochastic car to side? Does that indicate when it's over over butter, over salt on the hard time frame? Yes, of course. There's no such thing as overbought, oversold, yeah. Like Latvian Sniper said, overbought, oversold is all relative. When I open up RSI, I don't care about overbought or oversold. That's why, like, there's no... It's just vanilla RSI. And you don't really need this. You don't need this tool, just like you don't need other... You just need the price action. But this tool can help a little bit, if you're really good at using it. But yeah, overbought, oversold is nonsense. Because anything can keep going higher, anything can keep going lower. If you play in the markets long enough, you've seen things where you're like, oh, it's got to reverse at some point. It's oversold. And then it goes even further by a big, you know. That's why dollar cost averaging really only works because the dollar is inflated. If we didn't have inflation, only the true market killers would survive in the market. But because we have inflation, anybody can buy and hold the index and be a genius. The only reason they're a genius is because of whatever is traded in the index is traded against the dollar. If the index is traded against the dollar and the value of the dollar decreases every year, what do you think happens to the index? It goes up, right? It has to. But yeah, I mean, like, overbought, right? It can, especially in crypto, you could see overbought and it could just keep fucking going higher and higher and higher. And you're like, come on, at some point it's gotta come down. And then it doesn't. It goes, it doubles, right? But I get the way that you're thinking is good because you're trying to think relative, right? Because that's what those tools do. Something is overbought relative to its previous action. That's good. But just because something is overbought doesn't mean that it's going to go down. You have to take into account the structure and look for, you have to basically look to the left of the chart. Like if I show you a Bitcoin chart, right? I'm using the levels that I'm using to determine the supply zone of where Bitcoin could run into some serious turbulence. This level is all the way back from January 20th of 2025, so about a year ago. And this one is from May of last year. Yeah, we got a lot of Eastern Europeans in the stream. I think it's because of when I stream. Like in California right now, it's 12:40 in the afternoon, which most people are busy working and stuff. So probably not going to tune into the stream. Whereas in Eastern Europe, I think it's what, like evening time for you guys, right? Probably like 9 or 10 o'clock. How would you describe your edge in trading? Waiting for leveraged market participants to lose at the same time, which would then create an imbalance of supply and demand via arbitrage market making, taking advantage of the spread between the leveraged market and the spot market, and then waiting to see if that creates an imbalance of supply and demand. And if it does create an imbalance of supply and demand, then trading the reversal of that. And then after it reverses, looking at the price structure to determine if it'll hold certain levels. That part's a bit harder to put into words. I'd have to show you on a chart. But I show it all the time, if you stick around. That was coming from the YouTube chat, by the way, guys. I don't know if you can see that. Twitch doesn't allow me to do combined chats. So for the people can't see the combined chat on Twitch. It's against their terms of service. So basically, to put it in really simple terms, wait for a bunch of people on leverage to lose at the same time, and then see if there's an opportunity. Because when a bunch of people lose on leverage at the same time, it temporarily moves the price on the spot market, which could be out of balance of what the price should be on the spot market based off the true supply and demand. Yeah, I look at price structure for sure. Yeah, price structure is very important. I feel like Robin, this is coming from the YouTube chat, by the way, again, guys. Robin, there's going to be a recording of the stream posted on YouTube. It'll be the horizontal one, not just the vertical one. But today, I talked about like plenty of examples of, because I don't want to do it again, because the people have been here all day, or at least the last couple hours, probably don't want to hear me go through it again, but it'll be posted, this recording, and it explains how I look at structure. Looking at structure, particularly with Bitcoin right now, I said this earlier in the stream, this is probably one of the hardest structures to look at. Like in terms of analyzing it, this is, the high time frame structure is easy, right? You just look for the equal highs and stuff. But as far as like analyzing what's happening here is really complex. I mean, in general, it's complex. Like maybe what I would determine as easy market structure to be able to read would be seen as complex to somebody who's new to it. But if this example in particular is really difficult, Let me show you an example of where it's easy. So this is a meme coin, right? It's a meme coin that got quite large. I don't know why. Fucking meme coin's name is Dog with Hat, right? It's so funny the dog's wearing a hat, whatever. So the way I look at structure here, and I actually have to, let's go to the 4-hour candles, right? Is this gonna, I have to give it a little bit more room. Okay, so what I'm looking for is, first off, I'm looking for where's everybody's stop losses and where are their liquidations. At what point are people going to have to sell at the same time or close their position at the same time? Because they're on leverage, right? If you leverage long something, this applies to options market too. Options market is leverage. At some point, if the price moves too far against you, you're going to have to close the position. Not by choice, the exchange will do it. Robinhood, I don't know how that functions, but in crypto perpetual contracts, there's a liquidation point, price in which they'll close your account, they'll empty your account if the price moves too far against you. Okay, so in this example here, you can see that we have 3 times where the price has hit the low. So the normal person would think, okay, that means it's support, and look, it ended up pumping, so they were right. But the reason why I don't see this as support is because if everybody's liquidation price is underneath this, that means if we go underneath it, everyone's going to sell at the same time. Everyone's going to get liquidated at the same time. Stop losses are going to get hit at the same time. Then I see what happens after, right? So we go under it and price makes a recovery. Okay, fine. Price has made a recovery. So there's some sort of accumulation that happened here. If you wanted to buy a lot of this coin, how could you buy a lot of this coin? You wait till everybody sells it to you. How do you know where everyone's going to sell it to you? Find where the most obvious stop loss is. So coin recovers, and now we've accumulated. Okay, we've assumed that there's some sort of accumulation here, but we don't know for sure. And then we wait to see how does the retest happen. So we retest that same circle from over here, where the accumulation started, or where people ought to sell at the same. A lot of people sold at the same time. This is kind of messy, but it ended up working out. Okay, fine. So we've identified that. Then we look at the next one, which is right here. So what was the previous one where everybody had the same invalidations? It's a little bit hard to see, but you have like a bunch of lows in the same spot. And so price was able to hold this, so we expect it to hold the next area. Okay, so this is great. So the accumulation's working. Basically anytime the bears have pushed into bull territory, not only have the bulls won the battle in this instance and in this instance, but they won it quite decisively. If they didn't win decisively, it would look something like this, right? Or a little messy, but it basically bounced off the line. Okay, let's look at the next one. And this was actually the final one in this structure, which is up here. So we're just going one at a time, right? This is pretty much the last one in the structure. And then we see bulls pretty much held it. It started to get a little bit messy here, but bulls held it. Okay, fine. So new all-time high, right? Let's go take out all these short sellers on the other side of the market. Let's go for the all-time high. Okay, we tried, and then bang, the structure starts to crack. The structure cracks, we retest where the structure started to crack, and then dump. So if the structure didn't crack here, this thing would be, let me zoom out now. If the structure didn't crack here, basically right here is where it all took place, then this thing would have soared. But it did, and then what happened was the meme coin got demolished. So that's how I look at structure. At least one example of structure. There's different, the market's not always going to be like that. That's a really like cut and dry example. Sometimes it gets complicated, and sometimes there's different things happening and different structures to look at. It's kind of all relative. It really depends on what the emotions of the crowd, which leads to the printing of the structure, and then also the manipulation that happens on the lower time frame, which ends up either benefiting or damaging the structure. There's different scenarios that you'll see, but this one is pretty straightforward. And actually on this one on Bitcoin, the same thing happened multiple times. And keep in mind, this analysis is best used for markets that have a lot of leverage. So crypto, commodities, currencies, not so much individual stocks, because they don't have as much leverage relative to their spot market. These have big leverage relative to their spot market. So this wick here, we're going to discount it a little bit because the biggest crypto exchange went offline. So what happened was small-time market makers and mid-sized market makers were not able to reduce positions and got liquidated. So this actually took out a lot of small, 7 to 8, small is relative, right? 7 to 8 figures is a lot of fucking money, but 7 to 8 figures, 9 figures, market makers got wiped out here. Okay, so now we'll look at the same structure. So we want to look at, okay, where did a lot of people lose? This is kind of hard to see. If I zoom in, you can see more of the equal lows, but it's going to get hard. It's hard to move the chart over there. You have like the equal lows here, right? So they lost. Had some equal highs that ended up driving the rally, but we won't have to talk about that for this example. So price dumps, but it doesn't do that, right? So maybe some sort of accumulation that took place here. Maybe. So then we look, okay, does it hold it? So the bulls have won the first battle. Fine. Let's look at the next one, which would be this one, where you have another set of a bunch of equal lows where a bunch of people lose at the same time. And then you look, okay, bulls won the next one. And then you look at the last one, which is right here. Okay, same, it looks really similar to the other chart, right? So if we were able to get that new high, it would have blasted off, but structure cracks, we retest structure, and then bang. Now, the difference in what happened more recently is so there's some times where structure can crack and it can start to get rebuilt. And if it starts to get rebuilt and do this, that means that the demand is just so overwhelming the supply that it'll likely lead to that. But most of the time, from a probabilistic standpoint, it should lead to a dump. If you can rebuild it, though, it'll lead to something big. So what happened on Bitcoin, and this is kind of hard to see, the same logic, but so a lot of people lost here. We never got to see the test here. Sometimes that'll happen where you don't get to see it, but the next one we got to see it, which was right there. Okay, price held. And then the next one right here. Okay, price held. And the final one, which is really hard to see, is right up here. So price cracked. So then we got the retest. So where was the dump? We then spent the next week just hovering here, which didn't make sense to me. Because I thought to myself, okay, the probabilistic outcome is that we dump. Why haven't we dumped yet? Then I started to look, okay, well, we got equal highs here. We got equal highs here. So we know where all the short sellers have their stop losses and liquidations. So then it popped. And I talked about this before it happened, because right now it seems like I'm just talking in retrospect, but if you look at the most recent VOD, I talked about it before this. So I had underestimated the demand based off of the structure, and then I had to readjust and flip bias because of what the market gave me. By the time the moving averages cross, you're not going to be able to flip your bias. That's why there's value in using the price action, because you can see it in real time. Like, why are we spending a week here when it should just have dumped? That was the second sort of green flag that told me demand is sticky. The other one was when I see these insignificant higher highs, like, why didn't this high go higher? Why didn't this high go higher? When I see that happen, it's like, okay, well, maybe supply is really heavy. All right, so it dumps. So let's go get a new low, lower than what created the insignificant higher highs, which is here. So you have a high, and then you have the low, which created the insignificant higher high. We weren't able to get lower than that. We had spent like a week here. So I was like, all right, well, that's odd. We should have dumped here. Why didn't we dump? Then I started to slowly change my bias. When I saw this, it was enough for me to say, all right, we're going to pump. I could have been wrong. It could have still dumped. But when there's so many signs showing you that the probabilistic thing based off the chart is not happening, then there's some hidden demand there. There's some buyers that are laying in wait. They're waiting for these prices. But this one's a lot harder to see the structure on it than the other. This example is a lot more straightforward. Sometimes it gets really complicated, but you can still see it if you have enough experience looking for it. It doesn't mean that this rally is going to go to the moon now, though. That's not what it means. It means that if this fails now, then the only reason we got this pump that happened was because all the short sellers were in the same spot. All the short sellers are saying, okay, I'm going to close my short if we make a high higher on this side because we bounced off it 3 times. It means it's resistance. It shouldn't happen. And then it happens. They close the short, liquidate the short, whatever happens. You know, if they're stubborn, then they get liquidated. If they have a plan, they get stop lossed out. Most of the time, shorters are more sophisticated market participants, so they'll use stop losses instead of liquidations, but it was a mixture of both like it normally is. So all the shorts close, it pulls up the leverage market, which then the spot market gets pulled up because of arbitrage market making. And then we see, is there real demand? And so what we're witnessing right now in Bitcoin is the test of, is there real demand in the market? So far, we've gotten a daily close above, and we're probably gonna get another one here in a couple hours, another daily close above. If that's the case, it looks pretty good. But 2 daily closes above is not a guarantee. So the next opportunity would be, if it does fail, then you're gonna have this, you know, you got a higher high, right? You got higher lows. You're gonna have this surge of retail that comes in to try and, you know, buy it up again, and then you can look to short it to make a new low lower than that low, which is down here. But if it does hold, then we go a lot higher. We'll probably go, we'll at least test here and here, which was the previous areas that shorts got squeezed or distribution happened. So it's right there. And we could go higher than that. I don't know yet. I have to see as we get closer to it. But if we hold above this, then this scenario is off the table, and this scenario is on the table. And these arrows are kind of dramatic. It doesn't have to be a straight shot up. Maybe we run into some turbulence here. I talked about I talked about this area being kind of significance because this is where shorts got squeezed in the past. We had an insignificant higher high into a dump, so we could like run into some turbulence here before we get there, right? Or maybe it does classic Bitcoin crypto stuff, super cheeky, like wicks out all the last second longs and then gets there. I don't know if it's going to be a straight shot up. It might. So far it looks pretty good, but most of the time it's not. And a reversal here would be really devastating because, like, this chart's messy now, but if you look here, there's a bunch of equal lows, and there's a bunch of equal lows here. And if we look at the heat map, zoom out like the last 3 months of liquidation data. Again, this is a rough estimate, by the way. It's not exact, but you can see like the brighter the color, let's see if you can see that on your screen. The brighter the color, the more clustered together the liquidations are, or the invalidations, where people are going to have to close the position. You can see on the bottom side, the yellow is much brighter than anything on the top side. In fact, we just grabbed pretty much the most of the top side in that range. So this would be the ultimate test of, okay, we've grabbed the short liquidity, we've liquidated the leverage traders that are betting the market's going to go down. Now we need to see is the demand from people buying actual Bitcoin going to be able to sustain the float or sustain the price? If not, the inverse of that is taking out all these people who are going to sell at the same time. All these people are going to sell at the same time, and then you could get this nasty down arrow. Bitcoin's doing pretty good right now. We got a new high. We go for another high, we can get some orders that start rolling in over here on the right for the Twitch chat. The YouTube chat can't see the orders over here. I know this chart's messy, and I'll delete it in a second, but for the people in the chat who use indicators, I just want you to see how much information I was able to get just from the candlesticks. Because I think a lot of people underestimate the candlesticks. They see the candlesticks and they're like, okay, yeah, I get it. Red means down, green means up. All right, I got that part. Now show me the indicators. But you're skipping like the most important step because you'd rather have the flashy indicators, right? Hold on. This one's my favorite because it has the most junk on the screen. Look. Now I know what I'm talking about because I can read this fucking flashy shit. Yeah, fuck it. Throw Bollinger Bands in there too. There you go. Now we're really cooking. Put all of them. But like, when I look at this kind of stuff, I'll use these lines, right? But when I do like the freehand drawing, it's mainly to show you what I'm looking at. So most of the time my chart's pretty clean. It's got a couple lines like this, and the rest of these markings aren't there. What is an Ichimoku cloud? It's like an advanced moving average strategy. It's just a moving average strategy with more bells and whistles. Some people swear by moving average strategies, but usually if you're going to use a moving average strategy, it's got to be super high time frame. Like people will be like, oh, the 200-day moving average. And it's like, okay, how many times are we going to actually tag the 200-day moving average? Once, maybe twice a year? And that's maybe. We could just go straight through it. I mean, how many times have you seen a market go straight through the 200-day? The guy on YouTube asks, how retail-driven has a market or an asset have to be, in your opinion, to be able to take advantage of such leverage-driven stop runs and liquidity grabs? You want to look at the ratio of volume. So you want to look at the volume of the spot market and then compare that to the volume of the leverage market. And my favorite, obviously, is crypto because it's got the most amount of degenerates using high leverage. And by the way, leverage isn't a bad thing. I have this old classical saying. I can't remember if I got it from somebody or if I came up with myself. I imagine I probably got it from somebody. But the command in the chat is this. I think I'm logged into the chat. Hopefully I am. There we go. Oh, you can see his chat. Uh-oh. I don't think you're supposed to be able to see his chat on Twitch. That's not good. Might get in trouble for that. Leverage is like a campfire. It can warm you and the food, or it can burn down the whole campsite. And for the vast majority of crypto market participants, it burns down the campsite every time. They're addicted to building new campsites. Another market you can use this in is Forex as well. And another market is commodities, but really crypto's got that sweet spot of people not using risk management and putting their stop loss or liquidation in the same spot as everybody else. Everybody has their own approaches to the market, right? I'm not saying mine's better than anybody else's. You can use whatever method works for you. But what I have learned throughout the years is that, if I'm being generous, 95% of the strategies out there are complete horseshit. And the reason why I know that is because I tried to learn them all. It's probably closer to 99%, by the way, maybe even higher. And by the way, Robin, these aren't necessarily stop runs, right? It's not necessarily trying to find people's stop losses. The key is actually finding the liquidations. So in crypto, we have a thing called isolated leverage. And what that means is that You can be liquidated on a position, but not your entire account. So whatever margin you put on the position, that's what's exposed to be liquidated, not the whole account. So a lot of people will use this isolated leverage and use the liquidation as a stop loss. You'll see it more common from people who like to long than people who like to short, but both do it. And so once you can find an area where people have to get liquidated, there's some exchanges now where you can actually add margin to isolated, which is pretty cool, but kind of hurts my strategy a tiny bit. But for the most part, as long as you have enough degenerates in crypto, it'll still work. But yeah, there's certain parts where certain areas in the price, whether you speak English, Chinese, whatever language you speak, I think we can all agree that this was the high. The relative high. Doesn't matter what language you speak, this is the relative high, right? So everybody's thinking to themselves, okay, the price has bounced off this level, which means that it's resistance, means that it's a strong level. I know that price is going to bounce off of it because I've seen it happen multiple times. So all I have to do is put my stop loss or liquidation above this level, and my trade will work out because look how many times it's bounced off of it. And so I wait for their trade not to work out. And then I might have an opportunity. And I want a lot of people's trades to not work out at the same time. And then I might have an opportunity. It really depends on if the movement was caused by the leverage market being greedy, or if the market was caused by the spot market showing us the supply and demand. If the spot market is showing me the supply and demand right now, then what I shouldn't see is I shouldn't see the price go back below there. I shouldn't see the price do this. You're so mean not wanting our trades to work out. Hey, the people here dude, there's a million fucking people who trade crypto. There's only 100 something of you guys in here. So, I don't know, 0.001 or 0.0001% of people that I'm helping. There's going to be plenty of people who don't agree with me or who want to trade against me, and that's fine. I'm not really changing much by streaming to, a couple hundred people. Like I told you guys, just today, in the last 24 hours, 150,000 traders were liquidated for probably 1.5 billion, maybe 2 billion. 150,000 people just got, and that's one day. Crypto's everywhere in the world. And you can't even trade on Binance from the United States, and Binance is the biggest fucking exchange by a long shot. So even if you take out the United States, the collective rest of the world still has way more volume than the United States. The crypto is everywhere in the world. There's so many fucking people trading it that it's not a big conflict of interest for me. I'm not going to tell you where my entries are and my stop losses are, or my profit targets. I don't give that away for free. I wouldn't, I wouldn't do that. But in terms of like understanding basic strategy, it's not a big deal. And honestly, having an army of you guys with me, sometimes we can, go after that 150,000 people and kind of push it that way, Like, isn't it funny how the last stream on Monday I said, guys, we're going to pop the top, and then the next 2 days we pop the top? Was that because of my methodology or my army of whales or both? But no, it's mainly the methodology because Bitcoin trades 50 billion a day, 50 billion in volume a day, and that's just the spot market. Actually, it might be combined, but it's 50 billion a day. I mean, that's a lot of fucking money every 24 hours. You need a lot of firepower to move this thing. I mean, even when Saylor accumulates I think he tried to accumulate he did accumulate a billion around here. The price still dumped on him. There's not some force out there that's trying to take your stop loss. Really, a lot of the time, the reason why we get imbalances of supply and demand, in this case, I don't think it's an imbalance of supply and demand, at least it's not proven to be one yet. But one of the reasons why this happens, where we pop the top and then reverse, this case we didn't reverse, but imagine it did, is because by the time we're right here, everybody who has a short open is sweating. You know, millions of people are looking at the chart with the same position, and they're thinking to themselves, in this case it was 150K, but that's only the liquidations. We're not counting the stop losses. It could be millions of people. I don't know the number exactly. At least 150K, but probably way more if we include the stop losses. Anyways, when the price is right here, all these people are thinking, uh-oh, I'm going to lose. And some of them are going to start closing the position. And as more and more of them close the position, the short position, it operates as market buys. So all these market buys start flooding when, you know, maybe 1 to 5% of people get out of the trade, and then the rest of the 90 to 95% get destroyed right there. So, you know, like 5% get out right here, and that 5% push it enough to get the rest. That's if it dumps from here, though. This could just be because there's a lot of demand in the market. And I honestly think that it's more likely there's a lot of demand in the market, at least right now, because of those scenarios I showed earlier where we should have dumped from here and we should have dumped from here. But in both scenarios, we didn't dump significantly from there. So maybe there's a lot of demand in the market. I don't know. We still have to see, but I'm leaning towards this move might have some legs to it. We'll have to see, though. When marbles, we'll do marbles soon. I know I keep saying that, sorry. But like even when we're here, right? It's the same logic. You've got a bunch of equal lows, so everybody who's long from here is sweating when the price is here or here. I think the difference in this scenario, though, is probably all the sticky demand we had. There's so many spot buyers that the leverage capitulation didn't really matter. And honestly, during this period, market makers were actually selling Bitcoin and longing leverage because the spread was favorable to do it that way. So Wintermute was selling, I don't know about Wintermute in particular, but I assume that Wintermute was selling Bitcoin and then longing on the leverage markets. But even despite that, even the market makers selling spot price, there's still enough overwhelming to demand to shoot the price up anyways. I mean, that just shows there's a lot of fucking demand there. All right, have a good night, man. This is the top, and it'll capitulate to 35, 40K by November, or by October. Straight line down from here. Could you imagine just a doom drop from here? No, things don't go straight up and straight down. In crypto, they do sometimes, like this one. Just a doom. Sometimes there's a same thing on the upside. This was a tricky structure, though. I'm not gonna downplay how tricky the structure was, because you had some really cheeky, sticky demand coming in that was really good at hiding it. Yeah, I know a lot of people are pointing out this fractal here. You guys have probably seen this fractal, but this was the rally after COVID. So you had like the insignificant higher high, you had the big dump, which made the higher low, and then you had like the last stand rally. And people are saying like, oh, insignificant higher high, insignificant higher low, the last stand rally into dump. People are saying like, looks like this. It could be, but I don't know. It's just a fractal, right? It might, I don't know yet. I have to see certain things happen in order for me to be like, okay, that's definitely the scenario. I don't like speculating like this because it's really difficult to be right about this. We'll have to see who wins, the bulls or the bears, but regardless, I'm just going to position accordingly to what the structure gives me. The big thing is, though, if everybody has accepted this narrative, right? Why isn't it letting me go back? I gotta redo it. If everybody's expecting that scenario, imagine how many people are sidelined. If everyone's expecting what happened here to happen here, imagine how many people are sidelined. And I'm not saying they're gonna run back into Bitcoin because the way that we think, right, as humans is like, okay, well, if I sell my Bitcoin, I'm not going to buy back in and have less Bitcoin than I had before. Instead, let me shop around and look at Ethereum. And that's, I think, what starts an altcoin rally. Instead of someone biting the bullet and saying, okay, I was wrong about this, I'm going to buy back into Bitcoin and have less Bitcoin than I had when I sold it, I'm just going to buy Ethereum. And the same thing happens to people in Ethereum. Right, so Ethereum, say people have sold their Ethereum, and then Ethereum starts to show a lot of strength, and then the people who sold their Ethereum are thinking, well, I'm not going to buy back less coins than what I sold, how many coins I sold. Let me shop around and look at other altcoins. And that starts a chain reaction that you get in alt season. There's different things that trigger alt seasons. Like the 2018 one wasn't necessarily triggered by that, but the COVID one was more similar to what I'm speaking about. Timed a guy out. He was begging for money. All right. Those big exchanges have lowered their stablecoin APR quite a bit. Yeah, well, because yield, any yield, unless you're in corporate bonds like junk bonds, most of the time yield, if you're getting like 20-30% yield or something like that, it's usually not sustainable. Usually. If you're getting more yield than the S&P produces in ROI, that's usually a red flag. Some action on the 1 minute soon. What's happening on the 1 minute, Latvian? Uh-oh, Latvian's got some insider stuff right now. He thinks that it's gonna pop any second. What do you mean by soon? The sniper's about to one clip it. We're gonna get some fireworks. Latvian's about to either pump or dump it right now. He's giving you the warning before he does it. It's kind of at a standstill right now. I imagine the spreads are really just tightening. Liquidity a little bit thinner than I think. We also have a lot of icebergs to the top side, but the previous icebergs, we just went straight through them. For the people watching on YouTube, are you guys able to see the chat? Because on my side, it doesn't look like it's showing you guys the chat on the screen, not in the chat box. Yeah, check if it's on the screen, not the chat box, because I set it up so it'd be on the screen. Just like how this one is set up, but a little bit different. If the Latvian unloads, we see 60k tonight. S-Case, what are you cooking up over there in the background? Oh, you don't see the Twitch chat. Dang. Okay, well I gotta fix that. Let me cook. Uh-oh, guys. Brace for impact. Should we use the trend lines? Do you guys think the trend lines will help? Look at this. Look at the trend lines. Uh-oh, we're squeezing. We're consolidating on the trend lines. The reason why I don't like diagonal trend lines is because, first off, they're kind of arbitrary. Like, you could use this, you could use this. Some people use wicks, some people use bodies. And any tool that's founded in time-based analysis, I don't like. So the diagonal trend line interacts with both the y and the x axes, whereas like a horizontal ray only interacts with the price. Only interacts with the y instead of the x. What about Bollinger Bands? Yeah, dude, you just have to buy and sell when it hits 1 standard deviation. Crypto's never gone through the 1 standard deviation. And the Bollinger Bands like auto-correct every candle. So if they're wrong, like by the next candle, they'll be like, oh, look, it was actually right. All right, let's see if the trend lines work. Sometimes they do. There's some validity to them. I just don't personally, they don't help with like entries and exits. Like, I'm not gonna short when we hit the top trend line or long when we hit the bottom trend line. But it could be a useful way to visualize consolidation, right? It's a good way to be able to visualize, okay, we're making lower highs, we're making higher lows at the same time, which means that invalidations are squeezing, which means that people that have longed it here, their trailing stop losses are going tighter. People have shorted it here, their trailing stop losses are going tighter. Or they're ratcheting the stop losses manually. So they would like pop it either way. Crypto likes to do funny things like this though, it likes to do like that. Just take all the bottom side liquidity and then hit the reverse. Or the top, or the other way around. So yeah, it does like visualize consolidation, which shows you that you know, invalidations are getting closer together, more clustered. So anytime you have consolidation, it usually leads to volatility. After you get volatility, consolidation normally starts, and then the process repeats. We're just waiting on S-Case to start firing up the machine gun. The Latvian sniper's pulling out the machine gun. Putting down the sniper, picking up the machine gun here. Any minute now. We're waiting. Well, we're waiting. Uh-oh. Is it gonna go to the top side? It's converging, boys. What do you guys think? Is it gonna break out of the top or the bottom of the... God, liquidity's at a fucking standstill right now. Look at how slow the orders are coming in. Nobody knows where it's gonna go. Make a prediction. I feel like I'm gonna be late now. It's so close to popping. By the time the prediction comes up, people are just gonna hop in. Oh, is that a false breakout of the trend line? There's people showing up to the stream right now wondering what the fuck they're looking at. Guys, it's a trend line. It's really good. Don't worry. I can analyze 1 minute structure if you guys want. That held, that held. This is trying to hold. So actually this is a pretty critical spot because you can get a low lower than this low if it fails it. It's just a really messy structure. Let me show you what I'm looking at. So this held. Didn't really get a nice test of it, but it held. This held, which you can see it better on the 1 minute, and the last one is technically right there, which where we're at. So if it does something like this, retest into break the low, or just pop it. What's up, Hailey Z? The CVD is bullish on the 1 minute. Well, then I guess it's got a pump then, right? The CVD. What else is bullish and bearish? Give me the indicators. What are the indicators saying right now, guys? What are the moving averages saying? Where's the point of control at? All right, how about this? We'll do a simple projection. If you think we're gonna go below this low, put a 1 in the chat. If you think we're gonna make a new high, put a 2 in the chat. So put a 2, type 2 in the chat if you think it's gonna go through the low. Type 1 in the chat if you think it's gonna go through the high. Come on, my lurkers, where you at? Lurkers, you have to show yourself, otherwise it looks like I'm view butting. There we go. Look, this is the bullshit of trend lines, right? Okay, we broke out of one side, false breakout. We break out of the other side, false breakout. Come on now. What the fuck is this fucking trend lines? So I don't use them. But hey, look what I can do now. I can readjust the trend line to make it look like it didn't break out. Let me just readjust the trend line like that, and it hasn't broken out yet. Or actually, you know what? I was doing it wrong on this side. I should have started from this high, and now look, it hasn't broken out. Dang, it's pretty 50-50 in the chat. You fixed it like a magician. That's why the trend lines are overpowered, because you can never be wrong. They're so arbitrary, you can just redraw them. Let's see if we got any decent liquidity here on the low time frame. At least on the heat map. Latvian Sniper says down first, uh-oh. But look, there's more resting liquidity at the top side, Latvian. Alright, you guys heard him, he said down first. S&P actually recovered a bit on the day. Was down 1%, closed at 0.5%. Switch to the Heikinashi for the real trip. You guys want to see it in Heikinashi? There we go. Guys, you just have to buy it when it's green and sell when it's red. It's that easy. Uh-oh, they're coming for you, Latvian Sniper. You shouldn't have advertised it. They're coming for you now. Go get them, bulls. Go get them. People that are joining the channel now, though, like, they're just seeing me mess around. If you're new here, there'll be a recording of this stream. I went through a lot of teaching today for like, probably like 2.5, 3 hours. It's mainly for the traders in the chat. So if you're like a Bitcoin holder or investor and stuff, you probably won't find that stuff too interesting. But if you're a trader in the chat, you might want to check it out. Right now, Bitcoin's kind of at a standstill because we're not getting that much action coming in, which means it should pop soon, but with legacy markets closed, BTC One Bang kind of just hanging out, so. Come on, Biddy. All right, we have enough time to do a prediction. I'll put one up. Yeah, it's a little bit of an L right now, isn't it, champ? I gotta spread this out a bit more. Okay. Alright, so is there a mod here that can do it? Traxy, do you know how to do it? Or do you want to bet on it? Alright, so the way this works, if you're new, I'll just do it. You get channel points by watching the stream. They're free. And you can spend them on this prediction bet. It's going to be at the top of your chat window for 1 minute. So it's going to pop up right now. You're either going to bet on the price where it's at going through the bull line first or the bear line first. Okay? Prediction is now up. We haven't done one of these in a while. But maybe it'll inspire a little action on Bitcoin. Skinner's got to farm his channel points. Yeah, this is a difficult one. I'm expecting it to be like 50-50 on the RR. You guys only have a minute to enter, by the way, so don't be mad if you missed it. And then, after we can do marbles, I guess. Uh-oh, they're gonna come get your stop-loss Latvian sniper. Don't mess with the bull. Also, what's up with them trying to rename the bull bear thing? They're trying to make it hawk and dove. Fuck that, it's bull bear, dude. It's not. I'm not hawkish. I'm not dovish. I'm bullish or I'm bearish. Fucking like CNBC and like, yeah, like CNBC and like the American like financial news channels. They're trying to make it so that people say hawkish or dovish. What is the statue outside of the Wall Street? Is it a fucking dove or is it a bull? Put the hawk, yeah, the eagle. I'm gonna run a marbles game while this goes. So if you're new here, you're about to see a thing we do here. Most of the people in here have seen this though. I'm launching marbles right now. Let the people know marbles is starting.